All right. Morning, everyone, and welcome to the live trading room with the 5ers.
Good morning. It's Monday again. A new week, less economic data, luckily, this week. So hopefully more technical movements than we had last week. How's it going, everybody?
We had quite a lot of action last week. A lot of economic news, like you said. We had I can't remember. I know we had NFP. What else do we have? NFP,
very bad
inflation numbers.
Inflation we had for the Eurozone, if I'm not no, what was it? Not for the USA. Interest rate decision we had, of course. All kinds of things. And worst of it, the NFP, which came in not only worse than expected, but also with revised numbers to the downside for the US job market as well. Was why I asked myself how something like this possible. It's a bit crazy, though. It's like, I'm sorry, we overestimated it by a whole decimal point, and and that's a bit crazy. Nonetheless, my week of trading was actually quite good, with the exception of gold, I have to say. But other than that, especially in the NASDAQ, it was quite a successful week for myself. How was it for you, Jonatan?
Well, it was quite chaotic with all the news and everything. I did trade. Most of the trades that I did take was during the live streams here last week. Took a couple of trades with when Saul was on. Did a couple of some live trading, live scalping with Saul last. Was that last Wednesday? I believe. No, was that the week before? Man, I think
confused. That was the week before, no, if I'm not mistaken.
Oh, wow. Okay. No, so I didn't trade much last week, if I'm going to be honest. I feel like as a technical trader, it get quite messy when there's a lot of news going on. So try to take a little bit easy in the markets.
Yeah, I absolutely agree with you. Was quite a, let's call it, special market. Maybe I can go over some of the stuff I did there, since I always try to be as transparent as possible with you guys. I automated a lot of my trading strategies, especially here on the 5ers, for one gold account, which is the high stakes account, where I'm now in the second phase of evaluation. And for my old bootcamp account, which actually I didn't touch for a while, but reactivated it again and started automatically trading the NASDAQ. Plus, I also added euro dollar on, I think it was Friday. And yeah, let me share some results here. Svetna, do I have to click on transition or something like this here now? Or Jonatan? Or is that you are muted?
Okay, so what you can do is you see your name, you see Dirk, and then you press the blue play button there. That will automatically transition right into your scene.
Okay. Learn something new again. So yeah, let's quickly have a look there. So this is, maybe start with the worst one, the gold one, currently in a drawdown. So this is to be expected. This is also typically, in my opinion, what to expect from my system there when there's a week with a lot of news. First of all, I always had to avoid to trade 2 minutes before and after the news event. Nonetheless, doing okay. Minus 300 in drawdown right now, so there's plenty of time left. Let's see if it can catch up a little bit this week again, and to see it going onto the right path again. The bootcamp account, currently you can see here the cutoff. So this is basically here July 23rd, where I started trading it more in an automatic way. You can immediately see that in the equity curve is like much more, without so many outliers to the upside or downside. It's much more smooth right now. I had a very good, especially here on July 1st, August 1st, that was really like many trades in a row that went positive. Since Friday afternoon, and especially this morning, also giving away a little bit of the profits again, but overall still very solid. Especially the NASDAQ has been treating me very, very well there currently. So I'm going to update you on this, of course, every week, so you can see how does that develop, how does Dirk do with his automated trading thingies. I think in the fairness of transparency, that is just something nice. So what do we see? What do we see this morning really on the markets? And it's a bit of a mixed bag. We can already see that the NASDAQ is bouncing back. We can see that the S&P 500 is bouncing back. So they seem to, yeah, if I should put it in wording, I probably would say people are a bit afraid that something like this is going to happen again. This V-shaped thingy that we saw when nobody really, including myself, expected that the indices are going to recover that fast again. And we're kind of seeing this again. We are well supported, interestingly, here. And this is so nice why I love to work with this 8 weeks moving average and the so-called bull market support bands. So we almost exactly turned around at the 8 weeks moving average. And this is always so important because if we drop below it, there's always a quite high likelihood in the vicinity of around 70%, historically speaking, that price goes all the way down to the support bands, which at a minimum is trading at currently 6,000 points in the S&P 500. And interestingly enough, you, for example, see also the same picture in Bitcoin, which squeezed out to the compression zone and then also turned around for now exactly at the 8 weeks moving average. So quite interesting to see how well that always works out. So for this week, with like not so much, at least to my knowledge, economic data coming in with ISM tomorrow, that's still a big thing. But other than that, it's like not, at least if you're trading heavily the dollar or something like gold, not something that should like influence the markets as much as we saw that last week. Nonetheless, of course, be a little bit careful there. I'm right now looking for long entries in US indices. For gold, for example, I mean, I'm trading that automated, so it doesn't really matter anyway. It's a bit of a mixed bag. Look at this here also. Exactly at the bull market bounced. Exactly. And
Perfect.
after it closed under the 8 weeks moving average. But gold, it's a bit of a more difficult animal because we still have this weird, I don't know what to call it anymore, like compression sideways zones or something like this. That it just doesn't want to break out. I thought we saw the breakout one time to the upside, then to the downside, but yeah, here I am, and we're in the midst of things again. So not sure, as I said. I think that's also reflected right now in the how my automated trading system on gold is behaving, because it's a trend following strategy. It doesn't like really this whipsaw patterns, at least not too much whipsaw. When gold goes like up by $50, then comes down by $25, goes up by 30, comes down by 50. You're always going to have a very late entry with a trend following system. I'm experiencing the same with Bitcoin, for example, on the same system since beginning of July. There's a drawdown period. I found some methods how to address that with a percentage ATR filter, for example. But since I'm just started trading gold, and within the parameter of the system is expected to see something like 4, 5, 6% drawdown, I'm just going to let it run. The risk metrics are in my favor anyway.
So, given the fact that you're trading gold on a trend following strategy, then what happens, when it's ranging, of course, like it is now, consolidating on the high time frames. Now, is this strategy based on, I assume, the lower time frames, right? So
yes,
would it?
No, it's based on absolute price moves.
Okay, so it's not based on a specific time frame.
No, that's why it's Renko charts. Renko charts are not time based; they are price based.
Right, because Renko charts, they create a new price point or a new candle, if you will, when there's they're range bound, right?
Exactly. In this case,
Right.
like for example, $3 per brick you see there to the downside, red brick, or to the upside, green brick on the top left. That is.
So I would assume then you see like you just explained, you see a difference in performance when the overall market is in a sideways market.
The performance is still better, or let me put it like this: the drawdown is still less worse than it would be on time-based charts. So, for example, if you would trade the system on 15-minute candlesticks or something like this, or even below that. But nonetheless, you are not totally getting out of it. As long as we see these ranging markets, you are going to lose money. I'm going to lose less money per trade than I win per trade on gold. So here is usually I aim to capture a move of $15, and my risk is at $9. So the risk reward is still favorable when I'm below 50% hit rate. But of course, the longer sideways moves like this goes on, the more difficult it's going to be. Thus, my idea now to implement something like this percentage ATR filter, because on Bitcoin, for example, I noticed if like the implied volatility, no, historic volatility of Bitcoin is, for example, below 2.15% the last 10 days, it doesn't make sense to trade the system. You should not trade it at all and wait until volatility, historic volatility, is above that again. But this is, normal. You find like things to adjust to make things better along the way.
Yeah. Yeah, exactly. That's the thing, and especially with automated trading, because you create something and then it starts trading automatically, and it starts trading based on very specific specific conditions, and then you obviously have to see like how are these specific conditions, because you have to adapt it yourself. It's not going to adapt to the markets for you, so that's what you have to do as a algo trader or someone that is creating automatic trading bots. You have to go in and see if you can change with time so that you can adopt the EA to whatever market condition you are in, or try to make sure that it works in all market conditions. And that is, it's very, I mean, that's a very difficult task, because how do you know? Let's say you have 10 years of backtesting data, or maybe even 20 years. Let's say you have 20 years of backtesting data, and it shows that you have a max drawdown of, let's say, 15, maybe something big as 30. You look at perhaps, I mean, I've backtested some strategies and I've seen that it has very, very good results, and it looks really good. Equity curve is stable, everything looks good. And if I backtest it from 2015 to today, it's perfect. But then if I go back to 2005, till today, I see that the max drawdown might go from 7 to 35, and that's because of the 2008 crash. So in 2008, it just absolutely crashed, and something like that can happen again. And that is, I believe, that's a bit scary. That's the danger, I believe, of algo trading. And then you kind of have to think, okay, so how can you make sure that doesn't happen? Now, there are a lot of softwares out there. I found one software, for example, that tracks it puts a moving average on the equity curve. So it records the trading strategy live, and then it puts a moving average on the equity curve, and then it compares the current moving average for the live equity curve and compares to the backtesting. And when it deviates from the backtesting results, it's not going to open any trades. It's only going to open trades if the moving average is in a positive sloping way. So when the equity curve is going down, it's not going to open any trades, which is softwares like that is probably what can help you to negate that risk. But still, it's a big risk. It's a massive risk, especially now with the tariffs. We got Trump. We got he fired that lady who is in charge of the reporting the job numbers. Did you hear that?
Yeah, I heard that. And I have to I have to laugh a little bit about it, not because of the lady, poor her, of course, but I remember us discussing a couple of months ago when the administration fired all those external contractors they had for a very long time, whose sole purpose it was to make sure that the statistical data for those economic numbers is clean. So they fired them, and now they complain like, oh, our numbers are wrong. Well, guess why? It's not the fault of one lady. She's just the scapegoat, in my opinion, for something like this. But I wanted to very quickly comment on what you said with a moving average. I think that's a great idea, because usually if you backtest your system, you're going to get, when it comes to return, something like this, a very crudely drawn Gaussian bell curve. That is, that means like on this side, you have your profits. So the distribution, that is, of profits and losses, and you have your losses. So most of your losses, the line here is 0, are going to be either small profits or small losses. But then you have phases where you have outliers, even like very big profits, which are very rare, or very small losses. And if you see suddenly an accumulation of, for example, losses on what should happen very rarely, that means you're deviating from your moving average. And this is the time where it's a good idea then to tell your system, hey, maybe slow down with a position size, or stop trading completely, or do whatever, tighten your risk management a little bit. This is part, but that's exactly also the part that is sometimes very difficult to find out during backtesting, because especially if you are looking at lower time frames, you only have so much data to backtest. It's very expensive actually to get like 10 years of tick data or 1 minute data, and then it's a whole nother beast to tie that into a backtesting strategy, because the computational power you need is quite big for that as well. But I'm getting very much into detail. I don't want to do that so much. I know not everybody's into algo trading, and we want to look at some live training opportunities today as well.
Right.
But yeah, maybe we should do a workshop on something like this in the future, or do a snippet every now and then. Very
Definitely.
interesting.
I've promised to share my process of how I create my EAs when so definitely that's something we do. I mean, when we're talking about these EAs on automated trading, I mean, for a lot of people that's the dream, and I feel like it's a really cool thing to wake up and see that the EAs already in positions, already trading, and working. It's like you're outsourcing parts of your trading, and it's a really cool idea, and it's a dream for a lot of people. But I also think that the reality is that it's not just all automatic. You have to monitor, you have to update, you have to make sure that it's a lot of work. I would say that it's equal as much work, I would believe, as creating your own discretionary trading system. And it's the same with discretionary trading. I mean, yes, you have to spend time actually looking at the charts, manually open your trades, but you also have to monitor your EAs. So is it less work? I'm not sure it is.
It's more upfront work, no? You put like in 100 or 200 or 300 hours to develop and automate all of this and backtest and then automate, of course. So you have a much higher cost of opportunity. If you translate, like, you could do a calculation like, sometimes for my work, I would charge somebody, I don't know, like $100 per hour or something like this. And when you then calculate, like, I spend 200 hours to develop this whole thing and automate it, then you're first down by 20K. This is what you need to catch up to reach break even first again. And so definitely a calculation you should take into account, and also be aware it's really, just like Jonatan just said, it's not a one-way road. I'm like happy, on the bootcamp account I automatically earned $720 on Friday. Wow, such a great day. If this is going to happen every day, well, it's not going to happen every day. Like we see on the gold trading account, there are going to be drawdown phases. And this is why I'm such a big fan also, and that's the last thing now I'm going to say about automated trading, why I'm such a big fan of risk adjustment. Figures like the Sharpe ratio, figures like the Karma ratio, or the Sortino ratio, for example, which can give you a much better indication. Is the 1000% return you made in backtesting actually something that is worth the risk? No, maybe you buy this 1000 return with a drawdown of 80%. Well, then since that drawdown can happen at any time, it also can happen when you first start trading. And when you're then already 80% in drawdown, well, then it's going to be very difficult to get those 1000% in performance. So I'm saying this, like, don't concentrate so much on something like success rate, for example. I know a lot of people are always looking like, my system has a success rate of 90% or 95%. Doesn't really matter if you lose with one trade everything you earned.
Right. Let's just get into some live trading here. I am going to hold here. What do you guys want us to take a look at here today? We are looking at gold right now, and I'm thinking, I haven't looked at the markets today. This is actually first time jumping into the market. I've done had to do a lot of other work. I guess we call it work in the normal normal world outside of trading.
By the way, guys, leave us a like and subscribe also.
Yes,
we feed
thank you
of that.
Yeah, and we also, we tried to do the giveaway last week, and something froze with the giveaway software. So we're gonna try again. We're gonna try again today. We have five accounts to give away. I think it's 5 bootcamp accounts left to give away from the 80K celebration that we did last week. Right. So looking at gold right here, let's do a quick top-down analysis. I'm thinking maybe first I can do a bit of a top-down analysis here on gold, let you guys know what my views are here for the day on gold, and then maybe if you have if you want, Dirk, you could take a look at gold after me. So what we have here is a horizontal level. Now let's switch to the line chart here. Let's see if we can make any sense of this. So when I draw my horizontal levels, I try to get an overview of where is, and what I see right now is actually we have a range here. This looks like we got that pretty obvious range here, if you ask me. And maybe that level that I added in the middle, maybe that's the range EQ. Yeah, it is. So that's the middle of the range, and that's why I think that's why I like that level. The first thing I added was that level, because that's where we have the, I'm not going to say majority of price action, but that's a level that price has been reacting to quite a lot, and it also makes sense for that to be the range EQ. So now the question is, are we testing the middle of this range as resistance, or are we reclaiming it as support? Well, we can see here that that level, that was a resistance level. This level was support. And then we also overshot this whole level here. So one could assume that it's a pretty wide area where you have a lot of price action. So there's not any super clear price action. And what I'm trying to understand here is basically like any trader, we're trying to understand what is the most probable direction for price in the next coming whatever your time frame is. Now I'm thinking, because I want to look at gold for a possible trade during this session, what I'm asking myself is, what is the most probable direction in the next few hours or during the day? Now looking at gold here, we have of course this level as potential resistance or potential support. Now looking at the 4-hour, what I'm thinking is, first of all, we've added the level, we've added the range, we added the range EQ, and now I'm looking at this level. We know that this is an important level, but I'm trying to look at price action right here within this red circle to try to understand, what is price telling me? Again, I'm trying to ask myself, what's the most probable direction for gold in the next few hours? Now, what I'm seeing here is we got a 1, 2, 3, 4, 5 candles going straight up into this level, clearly acting as resistance. We got that bearish candle right here. Clearly this is resistance. If I add a level to that right here, to this low, because that's been used as support below. We're currently trading above that level. Not only are we trading above that level, we also have the low of the current 4-hour candle using that level as support. So now I'm thinking, if I go into the lower time frames and I start to see a bullish pattern, because right now in 4-hour I'm neutral, leaning slightly bullish, and the 4-hour candle just closed, so that's perfect. We can go into the lower time frames, so go into the 1 hour. Now what I'm seeing here is, I would say, again, neutral to bullish. The reason why it's neutral and full bullish is because we got a lower low, but we got these higher I mean a lower high, and we got these higher lows right here. And we are using that historical level as support. So 4 hour neutral to bullish, 1 hour neutral to bullish, the 15 minute, well, the 15 minute just looks like it's within a range here. And the fact that the lower time frames looks a lot like a range, you can go into the 5 minute. The fact that it looks more like a range here, and what I look at here is one range is here and the other range is here. So I'm not going to be using this within the range, drawing the range. And if I do, the middle of the range will be somewhere around here. So that would also add to the idea of this also being range low of a lower range. I know it might be a little bit confusing here, but let me know if, in the comments if you have any questions. But what I'm looking at right now is this. Now, it's not perfectly drawn. It's not a perfect range, but these are the levels that I'm looking at right now. Interestingly enough, the EQ of this level agrees, you know, it comes in at the same level as the range, the middle of the range, the EQ of the higher time frame range. Not sure if that has any statistical significance, but it's an interesting observation. So adding a level here, given the fact that we are in a range, adds to the idea of this being resistance, because obviously you get a big move to the upside and then you consolidate around an area that has previously been used as resistance. That to me adds to the idea of price pausing here and potentially using it as resistance. But given the fact that this is range EQ, we could assume that gold might be trading within the, well, it is going to trade within this range until the range breaks, okay? So this is currently the area where range is trading, where gold is trading inside. We got the range lows, we got the range highs, and we got the range EQ. So what I'm thinking here is maybe we can trade this range. And then I ask myself, inside a trading range, where does price have to be for the upside potential or the move to the upside to have higher potential than the move to the downside? Well, above range EQ. I would say if price is testing range EQ and trading right above it, I would say that the chances of moving higher to range high is higher than down to range low, especially if this reclaim of range EQ comes after a retest of the range low. Price has already been down here, a violent reaction to the upside, right up to range high, down again, big move to the upside, and now we get some bullish momentum coming in on the lower time frames. So looking at gold, I think the least of the path of least resistance right now is to the upside, and the higher probability move, in my opinion, is to the upside. Now, something interesting is found here on the 1 hour as well. Of course, by the way, if you like these types of, with deep dive technical analysis, let me know in the comments, and I will gladly share more things like this and also explain more in detail on the process. Now, we have a lower range right here. Remember what I said. So there's a couple of concepts we can learn from range trading. When price is, if you assume that price is going to trade within a range, where would you want to buy? You want to buy at range high? Or do you want to buy at range low? Range low is support, range high resistance. If you think gold is going to trade within this range, you obviously want to look at entries closer to the range low because it's as close to invalidation as possible. Gold is currently trading right above range EQ on this low time frame range. It's an historical level right here. Now I could perhaps look at entries here, stop loss below either the range lows or below this wick to give it a lot of room. Going back to the 15 minute, where is the range high of the bigger level? It's going to be, that's a short tool, by the way. Let's add the long one. Stop loss would then be below this low time frame range, and then we'll look at the upside. Where's the range high? Well, I'm just going to draw a resistance right here. Somewhere within this area, I assume, or not assume, I think there's a probability of gold stopping at maybe, we don't know if it's going to stop here forever or just temporarily, but at least, have some type of reaction, I think is probable within this area. Going down into the 1 minute again, we have a 1, 4, risk reward on this trade. And then you ask yourself, 1 to 4 risk reward, not very high, is it? Is it worth taking a low R trade? I would argue yes, it is, if your bias is pointing to a high probabilistic direction on all time frames. But then we go back and remember, okay, the 4 hour, neutral to bullish. We don't want neutral to bullish if we're going to take a low risk trade, or a high risk trade, a low risk reward trade. We want bullish. The 1 hour, again, I was neutral to bullish, which is not good. And then we go down 15 minutes, 5 minutes, it's ranging, 1 hour. Now it's breaking out, of course, like it always does when I'm not in the position, you know. But I would assume that no, it's not worth 1.4R. If I would see a good setup where you get like 3R or something like that, then absolutely that would be worth it. But I don't think, because gold is known to either, you know, break out, down again, take out the stop down here, and then move to TP. So I want to make sure that I have fairly wide stops on gold, but also if I'm going to be trading in a condition where I'm not fully bullish and I want to go long, I want to have higher risk to reward. And of course, when I'm saying this, it's going to break out. It's just going to, you know, hit that TP most likely. But that's what I'm looking at today on gold. Now, of course, this idea here might be gone. But it has not reached that resistance point right now. So if you're one of those, you know, low time frame traders on gold that's just, you know, want to get in on the momentum, I would probably, you know, of course not, this is not financial advice, but I would be looking at this move. I think right now, especially with the breakout, the high probability move for gold, I believe, in the next few hours is to the upside. Where, I'm not really sure, but I'm looking at 3,362 as a probable resistance area. Kelly Kaufman says, range trading rule number 1, don't diddle in the middle. That's a good one. I would argue though that if it has already hit range lows and it's reclaiming range EQ with momentum to the upside, I think that's a really good entry point for a long position. If there's strength, I would say the range EQ entry point, because the way I trade ranges is I got two ways of trading ranges. First, we have the buy zone down here. Make that green. Do we make it green? We make it green like this. And then we got the sell zone here. If the market is in a range at support, so let's say you have a big bearish move on the daily, it hits support, and you find a range on the 1 hour. You see daily comes down, and then you zoom in and you get this on the 1 hour. Then this is something that I would be buying. I would like to buy at the range lows. But I could also buy the range EQ, the reclaim of the range EQ, if I see something like this. If I see a break and retest strategy or break and retest setup on the range EQ to range high. So I'm never going to be selling a range on the 1 hour if it's at like high time frame support. But I will be buying the range lows, and I will also be buying the break and retest of the range EQ. In my range trading, actually one of the best ways to trade ranges like this is by looking at the range EQ and looking for break and retest of the range EQ. So that rule is it's a great rule to go by. But for me, I find that breaking a couple of rules that are not my rules are a great way to make money as well.
Well said, yeah. You're done? Oh.
I'm never done. You know me. I'm never done. But I'd love to hear your analysis on gold.
All right. So, in a nutshell, I have to say I don't necessarily agree with on this one. Due to a number of facts. So let's also start top down here from the daily, and then we'll work our way down. So the first thing I notice here is that I said that many times before, when we close below the 8 weeks moving average, we like to go to the bull market support bands. Not often, like we didn't do that here, and here, for example. Well, here technically we didn't close below. But one thing I noticed in this whole uptrend we had in gold, so the whole move to where was that from? well, basically 1,600 to now 3,000, and where was the top 500 US dollars, is that if we see that pattern, that we go to the upper bull market support band like we did here, then we usually see a drawback to the 8 weeks moving average, and then a second trial of a support band. So that was here the case, for example. We touched it once, we came back, then we ranged it a little bit, tried the breakout one more time, then came back. If I zoom out a little bit more, for example, into the beginnings, we saw that also here, where it took a little bit longer, but to be fair enough, the uptrend was not really an uptrend there. So this is at the moment like a little bit my go-to thesis, let me put it like this. And then second of all, we have this kind of triangle structure, and I get, it kind of depends now, where do you draw the triangle. Like always in techno analysis, it's more of an art than it's a form of science. But what could happen here if I really take into account the wicks here, and I choose the steepest triangle there is, then you can see we have struggled so much to come here. We've been deflected again on the extension of those two tops we had here. So for me, a variable option also would be that we try to go up here to around what is that, 3,403, which would not invalidate your thesis, by the way, as well, of course, just to go down and test again the bull market support bands. And if I go down the time frames now, on the 4-hourly, my drawings become even cruder, but it kind of looks the same. So I have to go really a lot lower, like on the hourly here, for example, to find something. Well, that's also not really for me a break of market structure, honestly, here yet we are seeing, because it's a difficult one here. I mean, you could always argue that this one was already the lower low, when in reality it was not. It was,
it is a difficult one.
If you count this as a low, of course, as well. But the more predominant one was, of course, this one here. So there, technically, we haven't made a lower low. So I'm a little bit with you when you argue like this, that you say, okay, we have here on the 1 hourly, actually, it's a pretty good defined sideways range at the moment, where we are completely in the middle. So
Yeah.
for me, it's like really, it's the typical setup where I probably would love to wait now if I have to choose, do I want to go long or do I want to go short, if I really see some price action here. So if on the hourly I see, well, that was a pin bar technically here, so maybe that was the trigger already to the upside, to go and attack 3,440 or 3,380 or 3,400 again. But I really would like to see something convincing there, a nice bullish engulfing pattern with a good volume traction there, that would make me choose to go the upside. Same, of course, applies to the downside. The thing that makes me a little bit wary at the moment to say, like, I like short term over the next couple of hours, I see a lot of potential for gold from the to the upside, is that we are really seeing strong indices this morning. US indices are really catching up again to the losses we saw on Friday. And we are quite early. This is not a lot of there's not a lot of volume in the US futures yet. This will happen maybe in an hour or two, that we'll get more volume. And normally when we see something like this, gold more as a risk off asset, in theory, should short term at least tend a little bit more to the downside. But we've seen a break or deviation from this pattern many, many times, also last week, by the way. So nothing is, of course, set in stone. Maybe it adds actually a little bit to my opinion that it's very difficult for me, a bit of a dice roll at the moment, to choose a side. Typical trade setup, if I want to trade this, for example, as a swing trade or even as a scalp trade, where I really would wait for a good indication from the lower time frames. I think not lower than an hourly time frame, honestly speaking, to some price action, bullish or bearish engulfing pattern, something very predominant, very clear, to really drive me into a good risk-adjusted position then. This is the way
Interesting that you say.
Yeah.
It's interesting that you say, you look at the markets and then you're you're kind of doing your analysis live, and I like when we jump into the charts and then we start to talk about the analysis that we do live, because you can kind of hear sometimes that we start with an idea and then our words start changing. And I like what happened there, because you looked at it and you said, I'm not sure that this is a break of market structure. I'm not sure I agree with that. And then you said, actually, this looks like a sideways trading market. And before that, you said it's tricky. And that's the thing. When you're looking for a structure in the market, but it's a range, and you haven't figured out that it's a range yet. Then it becomes like, I don't know what this is, because you have that trend following idea in your head, and then you realize, oh, it's a range. Okay, that makes sense. I don't know how, I don't really know, because direction.
Yeah, go on, please.
Yeah, direction is important, but when there is no clear sign of direction, it's almost like we become a little bit confused until we realize that it's a range, right?
Exactly. Yeah. This is also so important, in my opinion, at least when you are trading discretionary, to look at multiple time frames. And you heard me. You're absolutely right. If I just would have looked at the daily time frame now, I always would have said, well, my bias is here to the south because of the things I indicated there. That looks like, we're going to sooner or later see a retest here of the zone of 3,261 or something like this. But when I go to the lower time frames, predominantly at the hourly time frame, you see like, oh, actually, this is a ranging market. This is like a non-biased market, at least when it comes to my opinion at the moment. I actually don't know what to do at the moment. I need to wait for clearer indications. Now, and I think this is good. You need to be a little bit flexible with your opinion. Don't get married to initial ideas that you have. Be aware that you need to change your ideas not actually every now and then, quite often, in my opinion, to adapt to a market reality.
Yeah, definitely. I think, but I think one of the most important things in discretionary trading is understanding when, because most people, they don't change the way they trade when they should. They just continue to trade, and not only do they continue to trade with the same strategy, they probably overtrade as well. So you take a couple of extra trades that you shouldn't take in the wrong market condition, which just adds to the drawdown and adds to the failure rate. Yeah. Really understanding when your strategy works is so incredibly important. I had a couple of comments here from Kelly, very good comments here. So first, asking me about when we talked about the range trading that I talked about on gold. Kelly asked, when I go long or around the range EQ, do I put my stop loss below the original range low? Now, the original range low would be here, and no, I do not do that. What I look for is a break and retest, and then when that low on the retest has happened. So in this case right here, if I would go long on the range EQ, I would be doing something like this, and then this stops below the range EQ, where it makes sense. But the comment that I wanted to look at was first, Kelly talks about how the risk to reward is better if you just wait for resistance to hit, go short that resistance, or you wait for the range lows to be hit. And yes, most likely the risk to reward will be better in those setups, but it's not just about the risk to reward, it's about the win rate, okay? And then you say, I do believe the middle of the range strategy works. I have seen it. It's just not my go-to strategy, I suppose. And that's the whole idea here that I'm trying to get to, is if you, like me, I feel more comfortable trading around range EQ than I actually do at range lows or range highs. And that's because it just makes more sense to me, because I've seen something that works. I've seen the pattern. I'm following that pattern. But the pattern that other people see at range highs or range lows is something that doesn't make the same amount of sense to me, because I'm seeing it from a different perspective. Obviously, we're all different. We all see the markets in our own unique perspective. And I think that is super important right here. So again, we get questions like, we have one question from, let's see if I can find that one. asking what's the probability of the market of gold coming down to 3,351. Of course, I'm not able to tell you, oh, it's 50%. Like, that is impossible. Nobody knows. I don't know the probability of this to happen unless it's a setup that is activating, and I can then tell you my back testing shows me, this probability. But then again, it doesn't matter. We don't really know what's going to happen in the future. So it depends on the way you're trading, your setup. I don't know where you have the stop loss. I don't know, anything like that. So if I would just say what I think about this, do I think that gold is going to go down to 3,351 before, moving the same distance to the upside or something like that? I would say it's a fairly high probability of that happening because of the fact that we are in a range, and that level would come in around range lows. And as long as we break out of this range, I would assume that it's a fairly high probability of that happening, but I really have no idea what that probability is.
There is a little bit, Ahmed, if you allow me that comment, a little bit of a second layer, I think, in your question as well, because you're mentioning I'm in a sell and a short position from 3,351. So probably you are kind of hoping, let the price just get back to this. I can close my position at break even, and I don't have to realize a loss. This is very dangerous to do, especially if you are like trying to get an opinion from a third party now that validates your hope that it goes down to your initial selling price again.
Of course.
Then it's very easy then, if it doesn't happen, to say like, well, but Jonatan said there's a high probability, so it's Jonatan's fault. Don't go down that road. Really, it's difficult. This is why it's so important, in my opinion, to always have a clear, before you enter a trade, have a clear target. Where am I going to access this trade? Where am I going to pull that trigger? And then let the market decide whatever comes first. Or where's my trailing stop, and how does it trail, until I'm a profit? That's of course a valid strategy as well. But like asking for a probability, how probable is it that we see a move of what would that be now, $9 to the downside? For that to answer,
right.
We would need to export the whole data set of gold. We would need to make an analysis. How's the current ATR percentage range? How likely is it for gold to reach the outer layers of these or overshoot the ATR percentage rate? And then still, it would not guarantee anything. I could probably say then it would tell you something like there's a probability of 50% for that happening or something. So
I mean, that's why people come to these live streams. A lot of people come. Yeah. But like,
totally okay to answer a question like this. I just want to be very frank there, because I don't want you to later to not go into this trap. And we've all been there. I've been there countless times at the beginning when I was starting to be an investor, that once a position went against me, I was trying to look for news or opinions that confirmed my bias. It's very, very dangerous, because you very quickly become addicted to that, because it's so easy, to outsource the fault for a loss. I'm not saying that you are doing that. I don't know you, of course. I'm just, from my experience, from what I've seen in the past, that is a very common thing that happens with new traders.
Definitely. And I think, I do know that a lot of people come to these live streams to see see us live trade, so they can actually just take the same trades live, follow our trading, and we can't stop that. We can't do anything about that. We know that people come here, they're in a position, and then they're asking us, okay, I'm in this short, I'm in a drawdown, and then they're asking us like, oh, what's the probability of price moving here, which is then their entry point, so they can exit that position. We know how this works. We all know that, and everyone watching, we all know this. And even though you shouldn't be doing this, but that's why the failure rate in this industry is so high. 97% who tries to become become a profitable trader probably quits within 1 year or never becomes profitable. And that's the reason, because they are not able to put in the job. They put in the job necessary to build their own strategy and follow their own trading and journal and do it with that trial and error approach. And we can't really do much about that other than saying, please do not follow our setups. Please take the things that we are talking about and perhaps start building your own system. And that's the only road to profitability. I mean, if everyone would just be able to be a profitable trader following signals, there wouldn't be anyone manually trading, and then eventually there wouldn't be any signals. But it's trading is difficult, and don't make it more difficult than what it has have to be.
And very happy to read this, Ahmed, from you, that you didn't take this personally, my little comment here, or our little comment. That really shows also, that you are on a good path to become a good trader.
So I want to show you guys something, and I can actually copy this into the. This is a very. First, show you what I have here. Now the screen gets all okay. The one. Now this is a very simple way of, and I would say that this, for most of you, are probably going to be your first entry into system creation.
Can you zoom in on that a little bit? It's like very hard to see.
Okay, let me see.
With string plus or something. Control.
Maybe like this.
Yeah, that's a bit better. Yeah.
So what I can do here is I can share this. Just copy the link here. I can share it to everyone in the comments here, because I know that a lot of you are not. When you get this link, you are not able to edit the original file. So what you have to do is, you can see it says very clearly here in red, you need to make a copy before using this template. So you go to File and then make a copy, and then you got your own copy. Please do not request access, because I'm going to get flooded with emails. I actually do get about 10 emails every day about this template. So very clear, you need to make a copy for this one. Now, this is a very, very simple way of seeing if what you're doing in the markets has any potential. So you have 10 different confluence trackers right here. You can put in the date, the time, and the pair right here. And then you can see on average R, you can look at your average risk to reward per week, weekly, monthly, and you can look at which your most profitable pair and things like that. And you can track your trading sessions and all of that. And you can also, more importantly, you can track indicators. So let me give you an example here. Let's say we're using, you can see in confluence number 1 here, we have a 4-hour engulfing candle. We got a 4-hour outside bar. Confluence 3, we got the stochastics RSI location. Now, for those of you who have followed me for a while, you know that location, the stochastics RSI location, means that it's oversold or overbought. And then the stochastics RSI cross. Now, this could be a bear cross or a bull cross. And then confluence number 5, we have the 0.618. I'm not going to go through the others or add anything else, because you get what I'm trying to say here. So let's say we have we do manual. This is to create a discretionary trading system, right? So we go into TradingView. We use the replay tool. We look for, let's say, we're looking for a break and retest setup. Okay, so we look for an uptrend, and then price hits resistance. Price breaks above that resistance, and now we're looking for a retest of the breakout level. So we have a setup. We see that the setup is a 2R trade. It's a 2R winner. So we go into results 2, type in 2, and then for confluence number 1, we look at the trade. Is it a 4-hour bullish engulfing candle? Yes. Is it a 4-hour outside bar? No. So there's no check on that one. Stochastics RSI location. Let's say it's a long trade. So stochastics RSI needs to be oversold. And so confidence C, yes, it's oversold. Let's say it's oversold, but there's no bull cross, and it does hit the 0.618. Now, what you can do with this is if you have, let's say, hundreds of different trades, and you're tracking 10 different indicators, what you're going to see is you're going to see the win rate of every individual indicator, and you're going to see the profitability of each confluence with these individual indicator. Now, if I add, for example, down here, the 20 EMA and the 50 EMA, let's assume that every time price hits the 20 EMA, it has a 75% win rate. If it hits the 50 EMA, it has a 10% win rate, and it's actually unprofitable. Then you know, okay, I'm not going to be using the 50 EMA in this trading system. So by doing this, you can actually do every trade manually in TradingView replay tool, and then you see which are the most profitable indicators in my system, and then you just remove the ones that are not working and keep the ones that are working. And there you have it. That's your very first entry into system creation, how you create a very simple technical trading system. And then you can go into more advanced ways of developing this when you actually have something that is working. And this is actually a very effective way of doing things. You can find it in the comment section. I'm actually gonna pin that comment, so you can go in and you can check that one out. This is I've created this backtesting template back in. I made the first version of it in 2018, and then I made a new version, which is this one you're seeing right here around 2023. And this is the way that I developed my trading system, and all the trading system that I've tried or created has been created with this process right here. And then where the magic really happens is when you find something that works in back testing, and then when you're forward testing, you're going to be using a trading journal like TradeZilla or Edgewonk, and then you're going to get all of this, but in with much more information. But you can only do that in forward testing and live trading, obviously. But what this does is it gives you a guide to what's working. So you don't have to like you first cast a broad net to see what works, and then you move into the next stage.
You should turn that maybe into a standalone kind of solution, that you can download, execute, it fetches automatic the data it needs for the analysis.
I mean, I can easily do this with the no-code
exactly
website. And you
then
know
you
what?
do something like, it's like, one test bracket of the data, and then it's automatically going to test it on data it hasn't seen so far, that you don't go into over optimization and stuff like this.
Yeah.
It's a pretty cool tool. But I like, if you guys out there are a beginner trader and you test this great tool of Jonatan, to not immediately go into, I'm going to vibe code something like this into a standalone solution, but to use it manually, because it teaches you also a lot about the markets and what to look for, and really that you need to look at individual indicators, at individual price action patterns, and understand them. Otherwise it's kind of like, I have a shelf full of books to learn Spanish, but I never read them. So I just pretend that I know something about Spanish.
Yeah, the manual testing is what, I've spent countless hours manually testing different systems, and that's what that's where my knowledge comes from, technical analysis. The thousands of hours of screen time, basically, manually going through the charts and looking at technical analysis. That's where I got my knowledge from, basically. And the reason why I'm not creating application out of this is because I'm now more focused on algorithmic trading. So I could definitely do that, but I have many ideas.
That's my problem. I have so many ideas and so less time to automate things. Like yesterday, I was sitting there, I was thinking, because I have been working for quite a long time on a system. Well, I need to go a little bit further. I once saw, I've talked about this on the live stream here as well. If not here, then on the podcast I do with LJ every 2 weeks on ABL Labs. And I noticed this correlation between M2 money supply and the price of Bitcoin, that they correlate very high. And if you kind of move the M2 money supply chart a little bit to the right, it looks like it's front running Bitcoin. So I develop a tool to test, is this true? Well, it turns out it's not true. It's actually the opposite. It seems like Bitcoin is front running M2. But then I thought, what happens, if I add more data to the system, like the SP 500, NASDAQ, gold, euro, dollar, the SPX economic data? Can I forecast then the price of Bitcoin for the next day? Well, it turned out, no, I cannot. It's a dice roll. It was like a chance of 50.2% to do that correctly. So basically a dice roll. And but it turned out that this system is actually very good in forecasting volatility. So when there's a high probability of high volatility events happening to the market, on forecasting for this week, the volatile range for Bitcoin is probably going to be this -2 +2%, which helps you also then to find, for example, for swing trading, areas of confluence. So it's always a work in progress. You have an idea, you code that idea or put it into an Excel file or what is that, Google Sheets here in this case, and then from there you have a new idea. And this is, for me at least, how I always eventually come to find something which actually gives me an alpha or an edge over the market.
Yeah. I'm you know what? I'm not gonna pretend that I listened to everything you said, because I didn't, and I feel like when I do pretend it's just gonna sound
I know
extremely...
that's why I stopped so abruptly.
It's just gonna stop. I was reading a message and then I'm like, oh man, now I read a message for like 30 seconds and I'm like, okay, I'm lost.
Oh god, don't worry.
Yeah.
Anyway, I don't want to go too much into that AI stuff again. As I said before, we might do some special or something, or maybe record a course on that in the future. For sure, that's the big thing, in my opinion, to be in. However, I read earlier, I think that person has probably given up by now, somebody asking about our opinion on cable. So maybe we should have a look at that and do the same thing we did prior with gold.
Yes, I'm going to switch over to your screen and maybe you can look at that first, and then I will look at my screen.
So let's have a look at cable. Well, you don't see cable here for now. You see the DXY, so the US dollar index. And but I'm just going to do this right now with cable, which is as well as euro dollar, in my opinion. Let me start by this. Quite hard currency pair to analyze, because the market is so political at the moment. It's especially in the US dollar, it always can change so quickly because of what Donald Trump said again. Are tariffs coming? Are they not coming? Are they delayed? Are they higher? Are they lower? Kind of always feels like rolling the dice when the guy gets out of a bed in the morning, what his mood is, or who tweeted what about him, and where he thinks he needs to do revenge. But if I approach this now from pure technical point, in my opinion, how I would start right now, because predominantly this is like somehow a mixture of a sideways, slightly upwards move on the daily. You could of course say like this was a lower low, then we had a higher high, higher low, higher high, higher low, and so on and so forth. But not really, because if we take into account this whole structure we saw here, we are technically still like in kind of a very broad consolidation range. And this is where I like to use Fibonacci levels, for example, to determine where are really areas that might be important for the market. We saw that before here, how well it was deflected on the 0.786 retracement, then came down, pierced really through the 0.68, came back, then went to the next level, and we're kind of seeing the same right now. So We are somewhere between the 0.68 and 0.786 retracement. And we need to go now to a lower time frame, because again here what we've seen is that we are trading somewhere around the bull market support bands. So my bias would be now, since technically this is a little uptrend, that we'll recover and attack the 8 weeks moving average, or at least the 0.786 retracement here again. Now I need to go down. I'm going to leave out the 4 hours because it's probably going to look the same like the daily one, pretty much. Well, you could argue, see, and here's again, we are at the point where I might change my opinion a little bit, because we made a lower low here already. Not really. It's still at the same level, actually, as we saw here. So technically, this is a zone of support, actually, right now. Let me switch that to green. Let's go down to the hourly. That looks more like the 4 hourly. So yeah, what I would like to see here, actually, to be honest, is a little bit more confluence. So if we had now the 8 weeks moving average also trading somewhere around this area of 134.15, or we would have a bull market support band somewhere up here, I would always say, like, well, if we reach, for whatever reason, in the next 1, 2, 3, 4 days, this area at 134.15, I would look for a short entry there, for a deflection from that. But the way it is right now, there's still really some way to go. We need to overcome the red bull market support band. We need to overcome the yellow bull market support bands. And then only then the way is really free to that retracement level. So my go-to, what I would prefer right now, if I would be trading this, which I'm not trading GU, would be to actually look for short entries around this bull market support band, and then bet on a retest of the support zone here at 135, 131.38, around that. So 135.50, 131.50. Oh, my God. And but it's not really a trade where I say, like, likewise in gold, where I say I need to enter that now. Again, here also, I would want to wait for price action to see how's price now behaving here. Am I getting a nice, preferably a bearish engulfing pattern that kind of gives me a little bit more confidence that price wants to go lower again? I could place my stop loss up here, so have plenty of R here to the downside. That would be my preferred trade, but it's not certain. It's not a trade right now I would take also, I must say. For me, this is like gold, a little bit in neutral territory, which, by the way, also is a bit typical, for to see something like this on a Monday morning, where we Europeans tend to wait first for the really important moves. It's not about strong moves, it's about the important moves until the US comes in later.
Interesting. So let me share my view on GBP/USD. We are looking at a similar, you and I am looking at it. We also have Silly Master coming in here asking, any position and trade. If you hold on just a couple of minutes, we'll see if we can find anything or what we have going on in terms of positions.
Excuse me for 5 minutes, yeah? Sorry.
Of course, no problem. This morning, I was sitting with my laptop in the living room, and a bird flew right into the window next to me. I got this big window in the living room, or like living room table, where we eat. You don't care about that. Anyway, we have a window to the right of me, and there's this big bird just comes, boom, right into the window, and then it happens again, like 10 minutes after. It's like, and this is not the first time that it happened. Like, I had it, big birds, small birds, they're just crashing into the windows. Now I'm thinking, like, it's the first time that has happened in like 10 years. And I'm thinking, Kelly says that it happened to me yesterday as well. So now I'm thinking, is there Is there anything wrong with the window? Or is there anything wrong with the birds? You know, like what's happening with the birds? Stop not being able to navigate for some reason. Like, I know they can't see the window. They think it's just it. But why? Why you want to fly into my house? Anyway, GBP USD right here. Now, I'm thinking two things. Now, I'm gonna be honest. I'm not super. I haven't really gotten a good view or a good idea or a good feeling of where I might think, you know, in terms of the macro. Okay, so what do I think cable will do, you know, in the next few days, next few weeks, or whatever, based on the macro environment? And I don't really have a good picture of that, which I believe with this type of analysis, it is important. But I have two ideas that I'm watching, okay? And now I hear something upstairs. I mean, if it's another bird, like I'm gonna go outside after the live stream, and if I find like 3 dead birds, I don't know, I'm gonna call an exorcist. Like, this is crazy things going on here. Anyway, so this place right here, this resistance right here, I'm thinking either we're gonna see a move up into this region with a, you know, creating, you know, sort of move like this, you know, or we have a distribution. We just printed a distribution range on GBP/USD, which I think is fairly likely, because technically I think this looks very much like a distribution range where you have a strong trend to the upside, right? Something like this. Trend continues, equal lows, lower highs, sort of like getting that head and shoulders pattern right here. Then you break the support, and now you're coming up to that level where I believe we also have got the 50% fib here, you got the 0.618. I think this looks like a good good resistance. So I would actually be looking at potentially entering a short on GBP/USD here if I have confirmation, because I think this is a distribution range. It looks like a fairly clean distribution range. Yes, we got that support right here. Of course, very strong support. Not very surprised that we saw a bounce here. But if we get a rejection up here, I think I will be looking for shorts, and I think this is a distribution range. But then I'm also quite bearish on the dollar, so tough one. It's definitely a tough one. Yeah, I've seen the movie Birds. Okay, I've seen it, but I mean, they're not attacking me. They're just, you know, maybe they had one too many stop losses hit. I don't know, but apparently they're not enjoying life, and they're flying straight into my window.
What's with birds?
I don't know, man.
What did I miss?
Okay, so twice. So last couple of months or last couple of weeks, months, I guess, we've had birds flying into the windows of our houses a bit too many times. And today I had 2 big birds flying into the same window twice in 1 hour while I was sitting working next to the window.
Okay. That's weird. I only have that with wasps, but they always come inside and not just hit the window, which is like super annoying. I've been stung like 3 or 4 times already this year. So annoying.
Oh wow, really?
Yeah.
Yeah, I would rather have wasps flying into my window than big birds, though. Okay, so that's it. Was this the level that you looked at on GU as well?
What is that level?
That is like 33.7-ish.
33.7-ish. I was looking at 134.15 or 133.41.
Okay, so it's basically the
It's where the
si-
bull market support bands is, or the retracement from the whole move down 21 to 23.
but
This,
would you agree that it looks like this could be a distribution range and GU is ready to move lower? But the thing
yeah,
is with this though,
that's
like
my prime. That's why I said like I would be looking more for short positions actually on this right now.
yeah, and you know what? Like if you look at just last 2 years and you look at the daily 20 and 50 EMA, they actually have, when the trend is broken here, you do usually have a big move to the downside. So
Yep.
I do see here on GU that the overall bigger moves, and I'm talking about right here when it breaks this level, and then when it breaks this level, and now when it breaks that level, the overall moves that they're quite violent. They're and it's quite clear. You have the 20 EMA crossing below the 50 right here, and at that point, price is down here, and then retesting that level here. And we can also add a fib on this move, because we can't assume that price is going to go all the way down here, but we can assume that, well, not assume, but I think there's a probability at least of price perhaps going down to the 50% or the 0.618. You see a consolidation here at the 50. You also see a hit of the 0.618 right here. So technically, I would definitely be more biased to the downside on GBP USD, because I don't think I don't think the trend is very bullish at this stage.
That's why I said in the beginning, it's a bit a mixture of a short term. Yeah, we had a more US dollar market, more a strong British pound, but the overall structure is like sideways, downwards. It's very, very hard to pinpoint that one. This is also why I said I think it's a very political market at the moment. Like everything regarding the US dollar, it's the same when you look at euro dollar. It's the same when you look at dollar yen. Maybe it becomes a little bit clearer when looking at the Dixie, where I said I think at the moment I would prefer shorts under 100 on pullbacks always on the Dixie, and but very, very difficult to trade because also either we have nothing happening or it happens all at once. We have like this spikes of volatility and then nothing again. Volatility spike, momentum, nothing again.
Yeah. But by the way, did you see the new update in MetaTrader 5?
What did they do? I installed it, but I didn't care to look what changed.
I think they added dark mode.
There's a dark mode?
I think there's a dark mode. Isn't it incredible that took them like 12,000 years to add dark mode?
Well, it took them already 12,000 years before that to update it from MetaTrader 4 to 5.
Yeah.
And it's still, if you compare it to other software out there like Sink and Swim, I'm not even considering TradingView when it comes to trading, at least a very good piece of software, but MetaTrader 5 is very outdated. Yeah,
It is very outdated, but it's the EAs that really
exactly.
It's the way that you can, the automation and the way you can customize the EAs and the way it's a programming language or a way of programming that is well known in the trading space, and the back testing platform or engine is good, but
it's a bit of a joke, I mean, I pay like, what is that, like $500-600 a year for TradingView for the premium thing, but I only use it to look at charts, which I then execute on the MetaTrader. So the charting functionality on the MetaTrader I don't use at all. It's just an execution software for me.
Well, I need to, and I definitely feel I need to share my screen here with MetaTrader, the new dark mode, because it really looks quite good, actually. I really like what I'm seeing here. This is not the way we're used to see
It looks a bit
MetaTrader
more
5.
sleek and modern like this, yeah. Although
It
it's
does.
just a change of color. No?
Yeah, it's almost like you. Yeah, I mean, like it. It looks pretty good. Actually, looks pretty good. I got two orders in here. Let's see if I have anything interesting. Euro JPY. That's a weird trade from the EA. We got GBP, JPY here, looking for a long up there. I'm adding two more EAs to my portfolio. So now I'm up at, I think I have 9 or 10 EAs running on this account.
At the same time?
Yep.
Wow, that's a lot.
The idea is I want to have 50 at the end of the year.
Oh yeah, you were talking about the portfolio effects you are hoping for.
Yeah.
Yeah. By the way, I'm long gold dollar automatically. I'm just seeing since this morning. I entered at 3360, take profit 3375, and stop loss 3351. Looks like it's going to be a loser trade once again for that poor gold EA. And you are muted again.
Yep, I'm muted. Thank you. So we got that range EQ area right here. We're looking at 5 minutes on gold. Now to the back to the idea that I talked about potentially trading around range EQ. There's a lot of R's in that sentence. Now what I'm seeing is a potential break and retest on gold to the downside. This is a very tight range though, so it's not a huge move. Let's see if I could perhaps enter a position here on gold, because I do like what I'm seeing right here. I'm gonna keep trading view up here, but I will. Okay, so we got the 1 minute here. I like this. I like what I'm seeing here. So I will actually go in and I'm going to be entering orders for this trade as a short. Where do I want my entry? Okay, so I'm going to put my entry right around that level. Where's the stop loss? Let me see. Let me try to adjust all the levels here.
So you want to go short, yeah? You want to trade against me, you traitor.
Yep, that's exactly what I want to do.
That's a good idea. Yeah. I think you need to be fast on this one.
I'm short right here. I missed the entry right here, so I shorted at market. What I did. Didn't get the best entry though, but I got my entry like here.
It's the first live trade of today's session. So guys, if that is not worth a like and a subscribe and a comment, I don't know what is worth.
I'm gonna switch over to MetaTrader here. Celebrate.
What risk did you take on this one?
Let's not talk about that.
8%. All in.
So let's see, which of is this the correct one? Yeah, okay. Let's see.
Whoa, that is. Is that on? Yeah. Oh, that's on a 10K. Wow, that's. You want to pass the evaluation with one trade on this one, yeah?
Oh, I don't know. I missed. Sure. Yeah, I think that's so. Got two options. Obviously, either TP down here or the TP down here. I think I would be happy with that move.
Where's your take
Not,
profit there? 56 something or 55 something?
yeah. I think with the spreads, I would have to increase it a bit. Maybe here. Same thing with
That
with
still
stop
leaves
loss.
a little bit space to my 51 stop loss there.
Yeah. So what I'm looking at is the break of this level. It's not looking great now though. It's the break and retest of that level right here.
Investment opportunity for you here, Jonatan.
Okay, hi Jonatan, I made an EA which is giving approximately 75% return with 1% risk per trade in 6 months. I can give it you if you provide me 1 million account without challenge.
So basically, trust me.
So what you have to do is you say 6 months. Now give me that data for 25 years. If you give me 25 years worth of data, if you're able to replicate anything like that, then I might be interested. 6 months is like it's nothing. It's nothing. You cannot base anything on 6 month worth of data.
And furthermore, I mean, this is, I know you mean it as a joke, of course, judging by the smileys emojis you put there, but you would need to provide like risk metrics also. You have a 75% return, 1% risk. How was your drawdown? Was it like 80%?
Yeah, I would be
50%
interested in
or
the
something like this, but I mean, if you have something like this, you're confident this is actually a good reason. Why not, get a bootcamp account or something, invest some money, or a high stakes account if you don't want to invest too much money, and then trade that account for 6 months. And if really that becomes true, it automatically gets into funding. You automatically scale it up, and you potentially can have a very good life, especially if you automate it.
Yeah, definitely. I also think that 75% profit in 6 months. I have EAs giving me way more than that, but they also have. I mean, I have EAs giving me more than that, but they have a drawdown of like 80% or
That's the thing also.
60%, and the Sharpe ratio is like 0.1. So the type of relative drawdown in 6 months is approximately 5%, and total trades only gold is 96. Now it does sound interesting. So how have you tested this? Where's the data coming from? Like, what software did you test it in? Did you test it in I guess you back tested it in MetaTrader, but then why did you back test just 6 months? Why did you not back test 25 years?
And is that optimized? Like, did you run a back test where you optimized the entry parameters? So where you basically did curve fitting,
You know what? There's 3 metrics that, well, actually 2 metrics, and then I don't know if it's a metric, but 3 things that I'm very interested in. Actually, 4 things. Okay, 4 things that I think is my main characteristics when I'm developing EAs. So number 1, obviously important, max drawdown. Okay, what's the max drawdown? Now remember, I'm not going to talk about risk reward. I'm not going to talk about win rate. I'm not going to talk about profit. The only things that I care about is what's the drawdown of the strategy, what's the stability, quantifiable stability of the equity curve, what is the Sharpe ratio, and what is the out of sample results. Those are the 4 things that if you get that right, of course there's more metrics like that, but those are, I think, one of the 4 important things. And actually something as the most important metric that I'm looking at is actually the stability of the equity curve. Now that's the stability of the equity curve, usually a number between 0 and 1, where I'm looking for a stability that is above 0.8. The best strategies that I have is 0.95. And basically what that means is the stability, if stability is 1, it's basically just almost one straight 45 degrees angle through the equity chart with very minimal changes in the stability. So if you have, for example, a 45 degrees angle to the upside and then it goes flat for a long time, that's not a good stability. That's not great stability. You want to have a good stability. And I found that only looking at stability has actually found me a lot of very, very good trading strategies out there.
It's also nice on your mind, you know. I for example, with one strategy on Bitcoin, which even if I put in, you know, that I pay like 0.12% commission round turn, that I have a slippage of $60 on the execution price for entry and for exit, which generates like 8,000% in 10.5 months with a drawdown of 30%. So, of course, on paper, that looks very well and it's not optimized. However, the problem is if you enter the strategy and it first goes into that 30% drawdown, it's going to make you quit that strategy very, very fast, especially if you end up having large amounts of money on that account. I mean, imagine you have $1 million on the account and suddenly it goes from $1 million to $700,000. You are probably not going to do the wisest decisions, even though they are backed up by data. In that case, you're more thinking about, oh, I don't want to lose more money. This is why I agree with Jonatan there. It's always better to find something that is stable. You know, have like, of course, in best case, there's 45% angle on your equity curve. This gives you the best peace of mind, of course. Of course, it should end up with still having an edge over buy and hold. So if you have a strategy like this on the S&P 500, which returns like on average 8% per year, and you end up having a stable equity curve but earning only 3% per year, of course, then it's not worth, to trade this strategy because buy and hold would be the better strategy. So you still need to have an edge. And that's extremely difficult to find. You will need to do a lot of testing, readjustments, testing again, and so on and so forth to find something like this.
Yeah, and we have the comments here, saying you'd rather a more stable system than a profitable one. It's more psychological, manageable. And not only is it because it's more psychological, manageable, a more stable system most likely also is stable in other market conditions. If you have a system that is highly volatile and is not very stable, chances are that it's going to be even more volatile and even more unstable in unforeseen market conditions. The best systems that I've seen is the ones that have a stable equity curve in sample testing and out of sample testing. So they're equally the same. Now, what is in sample testing and out of sample testing? In sample testing is basically, okay, you backtest this system from 2000 to 2010 and it gets this result. Now let's backtest. Well, you create a system that is profitable on data from 2000 to 2010. And then you test it on data between 2010 and 2020. So 10 years of developing the system based on that price action, and then you're testing it on data that it has not been developed to be tested on. And if it's profitable on that data, it means that the system is profitable on data that it hasn't seen yet, that it hasn't been developed on. And I think that is it's very, very important. And that you cannot test in MetaTrader 5, I believe. Or you can, right? You can have out-of-sample testing, can you? No, you can't, because you have to test it. You have to create it. You can't do that in MetaTrader 5.
But you can do that actually very easy with AI nowadays.
Yeah, that's true.
But you need very easy, this is somebody telling you who has done this for a number of years already and programmed something like this. There are, of course, tricks also to like a go-to strategy would be where like take, for example, 60% of your existing data to train the system or to test your strategy, and then test it on the remaining 40 or 30% of data that it hasn't seen yet to test like, did it just memorize things when the best entry and exits are, or did it really find an edge? And you'll find that very quickly out on this unseen data. But it's even with AI, it's not that straightforward to implement something like this, in my opinion.
No, not easy at all, I would say. Right.
I think gold wants to taunt you once again today.
Yeah, I think I'm as soon as I'm in prime. Well, I like it, but I think I need to close this trade. This is obviously I mean it's keeps using this level as support. So what I'm gonna do is gonna add my TP here if I get a big spike to the downside, but I will try to close this position around break even or around profit, because this is obviously not the type of price action that I want to see for a short like this. As you can see, it's already hit the level where I wanted to take profit, but I do feel like we're in that slow time frame range. I might have a couple of more 1 minute candles to save this position. And of course, when I say that, the opposite happens. That's interesting. Okay, so let's close that one. So now what I wanted to see on gold was obviously I wanted to take profit on that move. I mean, that was the move that I wanted to make some money on.
Within the next 8 minutes, it's going down and hit your take profit, no?
Yeah, but of course. But I think the probability...
I'm just taunting you, don't.
Yeah, I know. But the probability of taking out my stop loss before that original TP is hit is, I feel like, just at this point, just higher than I mean, that's probably the more probable move for gold.
For me, it's like all the markets this morning is like a typical Monday morning again, after a week where we had, a lot of weird moves and data-driven moves, of course, from economic data, where the market really needs to find its, so-called
equilibrium. Yeah.
Yeah, thank you. One of those nice English words from this fantastic phonetic language again, and we can only beat that by making live streams in French. That would be even worse phonetically.
Right. Yeah.
Or Chinese. And but the market needs to find its cause. Why choose the difficult words if I can put it in simpler terms again. Very typical after this. This is also very, in my opinion, the reason why for my couple of trades I did this morning automatically that ended up in a loss, because we haven't found really our way this morning yet, with the exception of the indices, really. I mean, it's like up and away. It's amazing, really. It's amazing.
I'm gonna show you guys.
It's the greatest move ever. I've never seen anything like this. The greatest move under any president ever.
Yeah. I have. Wow. Okay, so I've just tested a new EA here, and I'm looking at it, and it doesn't use any. So I've seen that a lot of the EAs that are performing very well originally doesn't have a stop loss, which is potentially a bit problematic.
I mean, you could do that on a bootcamp account, no?
No, it's the bootcamp account where you need to have a stop loss.
No, isn't that the high stakes account?
Yeah, that's the high stakes account. You're right. Right.
That's because I remember because I applied the gold strategy to the high stakes account, and I was like, in some occasions I would like to not have a stop loss, but I need to have a stop loss, and it has an impact, of course, on the equity curve and on the backtesting results. But I mean, not really. I mean, on the bootcamp account, I also work with stop losses. Deanna asked me a very interesting question last week, Monday. Let me think if I get together that question again. So, because somebody from the audience asked, like, do you adjust your stop loss to, to support and resistance levels? We were talking basically about support and resistance. And I said, like, actually, with automated strategies, I don't do that. I don't care right now where are support and resistance levels. For me, it's always a fixed take profit and a fixed stop loss in terms of, for example, US dollar per ounce traded in gold. Excuse me. And because in my opinion, it's also very difficult, if you design a mechanical system, to tell the mechanical system to automatically identify levels of support and resistance.
That's
Because
very difficult.
it's not a scientific approach, right? It's like we all of us probably would like roughly draw them in the same region, but not really at the same price.
Yeah, it's very difficult to create horizontal levels with EAs or with indicators. It's because they're so subjective, like you say.
So this is why, I rather have like something on gold where I say like, okay, my take profit is $15 and my stop loss is $9, or on the NASDAQ, my take profit is 150 points, my stop loss is 80 points, for example. On euro dollar, it's 15 pips take profit, 5 pips stop loss, and I don't care about whether this is support, resistance, or whatever. As long as it works, and you're entering a new trade.
Yeah, this is USD CAD. This is a trade that I've been looking at for quite some time. I think it's quite obvious what's going on here. I think we got a move to the upside, distribution range breakdown. Now I think we have reaccumulation range around this this level. So I'll be entering a more of a long-term trade here on USD CAD. Okay. Does that one, now the fact that I'm also in that long-term trade, maybe we can look at lower time frames for USD CAD as well. Let's see, we got this. If we find support here and start trading higher, I think there's an opportunity to trade it up here on an intraday basis. That level. We need to see please reclaim this level first, or that's possible. That's what I'm looking at on USD CAD. Khaled says it would look better if your background was white. I would say no. I would say nope. Wouldn't. I would not agree with that. I think I like my background black.
I agree, because it's, in my opinion, also not good for the eyes to look the whole day on a white background. Somehow it makes my eyes more tired than looking at a black background.
Yeah, definitely. But this is the idea on USD CAD. You can see here on TradingView. To me, I feel like this is it's a very obvious trade to me. It's one of those high time frame trades where I see a pattern very clearly, and there is, I believe, a possibility of this being a accumulation range, and we got a break and retest of that accumulation range highs. So I really like that.
Let's go.
A bit later in the live stream, I'm going to get on and we're going to be giving away 5 accounts. So make sure that you do hit that like the live stream if you like what we're doing here, and make sure that you're subscribed if you aren't subscribed already.
Is that the giveaway from last week where the software
exactly
failed? Nice.
Anything else you're looking at, Dirk? I'm gonna, you know what? I'm gonna take a quick break. I'll be back in just a couple of minutes, if that's okay with you.
That's okay. I'm not looking at anything, but maybe the audience, you guys have anything you want me to look at? We had gold already 2 times today. We had cable we were looking at earlier. So anything you guys would want?
Yeah, let us know in the comments. We're gonna see if we get any suggestions, any short requests, anything that you want us to take a look at today. Let us know in the comment section, and we will gladly help you out. Digital Factory says USD JPY. Yeah, that's an interesting one. Maybe we want to take a look at.
the moment.
Oh, Kim says gold is going for my TP. That.
I told you it would.
Oh my God.
Of course. Sorry, I'm laughing because not at you, because it's such a common thing to happen. No, I mean, we
Every
all
single
experience
time,
that.
like every single time on
I tell
gold,
you,
like
it's
it's
going down to 50
unbelievable.
now. Then I'm going to be stopped out on a loser, and then it's going to trend higher again.
Unbelievable. This pair just, it's, I mean, look, yeah,
And it's so crazy.
absolutely
1
incredible.
week or 2 weeks, it's like my most profitable pair. Like
Yeah.
not every trade, but the majority of trades, really work out well. And then suddenly it changes, and I have like loser after loser after loser after loser. If I really wouldn't, strictly be disciplined about my risk management on gold, I would actually lose a lot of money. Like this, I'm still luckily earning money with it long term, but it's really, for me, the proof how important risk management is.
Yeah, no, it's super important. Crazy. I'm not gonna take a break because we do have. Actually, you know what? I'll be back in just a bit. See you soon.
Okay. Alrighty, what do we have? US dollar yen. Let's have a look at the good old yen, of course. Just need to see if I have the right chart here. But yeah, that's correct. And I say that the good old dollar yen because it was one of those trades I had an option position in, and which turned out not to be a good trade because I have some models running on which basically have a look at how is the treasury yield of 10-year treasury bills in the USA, compare those to the Japanese one, and then from that determine where the fair rate for the US dollar yen conversion rate is at the moment. And my models tell me at the moment that it's around 130 to 135. So what I did here a while ago, I shorted dollar yen at 145, but I closed obviously all of those positions. It was an option trade there. So I didn't end up losing really a lot of money on this trade, but nonetheless, it's a good example for you have an analysis, you have a model that works normally very well on telling you, where's a fair price, where should price be heading to, but still it doesn't guarantee you to end up with a winner, right? And so still you need to have a discipline to stick to your rules. So let's have a look here where we are currently. And for me, the first thing we see here is, of course, we have this crazy long-term in brackets trend to the upside, which started here, and then we finally somehow broke this, pulled back to this here in the beginning of January of 2025, were deflected again to the downside. And I think since then we're kind of trying to find our way in dollar yen. So we are, as with many of the US dollar pairs, as we've seen throughout the session, actually kind of captured in a very broad sideways zone. So can define this one here, in my opinion. You can define it here. Let's go further down. Is there another one that jumps into the eye? Yeah, maybe this one. We touch this one here, struggling to overcome it here. Yeah, okay, this is a good one as well. But you can see already maybe what I'm hinting at. It's again what we see in gold. It's again what we see already also in cable. So you'll find this kind of same pattern in a lot of US dollar pairs right now, that we are in the middle of nowhere, which is very typical again after the last week's economic data, which painted a kind of a bit of a different picture of the USA, where the job market is struggling more than we all expected. and since before that we thought of a better performing job market than reality showed us, and now we know, like, oh, there were calculation mistakes. Actually, the job market right now is much worse than it was before. It turned around the kind of a narrative to a way where right now we are somewhere always in the middle of the ranges, waiting for new impulses for us to know where we're heading. The nice thing about, in this case, dollar yen, in my opinion, is that you have a cluster here of the bull market support, the 8 weeks moving average. I don't think it's going to pierce all the way through this immediately. So short term, actually, if I see price action there, so I need to go down at least to the hourly again. So if I see price action here, somewhere in this area above, or maybe we saw that already, my preferred trade at the moment actually would be long with a target somewhere around 150.5 to 151. However, like I said before, it's like the same picture, and so on so many of the US dollar pairs, this insecurity we have now, because suddenly the job market is far worse than it used to be. So we are trading somewhere in the middle, and everybody's waiting for an impulse to know, like, oh, is the US economy actually going to perform? Or are we totally wrong? Are other statistics wrong as well? And we are maybe already in a recession, but nobody knows it yet. And this is very typically what we see, that we are somewhere in the middle, in between the zones. It's a and I know I don't like to say that, actually. It's really a zone at the moment, in my opinion, where waiting at the sidelines makes a lot of sense, because I don't see really a lot of risk edge and risk adjusted returns to the upside and to the downside at the moment. That's the thing, and sadly, it is like the moment, but it's okay. As a trader, you need to learn also when it's important to wait at the sidelines. Options on FX, with what firm I'm hearing here? Well, I think as a private trader, and I don't want to advertise, I'm not affiliated with them. You, at least if you don't bring like millions of US dollars, they're the best pricing probably you get at Saxo Bank at the moment. But if you want to trade options, there is no use, especially if you are short selling options, which is the strategy I am doing. I'm writing options, I'm defending the premium I get for the options. Then please don't do that with something like $2,000 or $5,000. You need a little bit larger account size to do that in a way that really, really makes sense from a risk perspective, also. And so, not something for traders maybe that are just starting out. Another question here from Stephen. What are the qualifications for one to be part of the giveaways, or is it only for the members of the Discord community? No, it's for everybody here who's watching our live streams usually. You will find links to those giveaways in the description of the video, of the live stream. However, today we are talking about a giveaway that we initially wanted to do last week, but the giveaway software, this beautiful wheel that always spins and picks the winners for us, for whatever reason it failed. So we said we're going to do that on Monday, with hopefully the software working again. I can see Jonatan nodding there in the background. I don't know what time you have planned those for today, Jonatan. Maybe you want to share with this.
That's going to be a surprise. That's going to be a surprise. I'm going to come on a bit later, and we're going to be doing that.
You need to stick around the whole day, then.
Yeah, that's right. Stick around the whole day.
Nicest way to spend your time anyway. So.
Yeah, exactly. And soon we also have the ABL gang coming on. I also hear we might have some technical issue. Technical issues. We'll see if we'll see who comes on and who is going to replace us. That is going to be a
mystery.
Yeah.
I see one person connecting.
Yep.
Looks like Magic Mike is coming.
That's right. See that he has. Anyway, what are we here? I'm. I'm actually going through a couple of strategies with my ES. I'm going to be I've just done the final testing. I might see. No, I don't want to be showing that. Daniel says, today is my first day trading a prop account. Is there a pair for beginners to study and trade that are safe than others? Okay, this is a very interesting question. So first of all,
Euro versus euro is actually very safe to trade. It's usually around 1.
That's a great one. So first of all, welcome and welcome and thank you for your confidence here of coming to us as your first prop firm and your first entering your journey into the world of trading. And we're here to help. We're definitely here to help. So please continue asking the right questions, and we will gladly help you and guide you on this new journey of yours. What I first would say is that learn about risk management, okay? Because if you got an account now and you start trading that and you're asking us for what pairs beginners should study, you're not really very experienced in trading. So what you need to do now is you're probably using this account as a learning experience, which is not a bad thing, okay? Because you can sometimes look at the money that you spend on the account as a learning experience and a tuition to a trading college, if you will, right? But you have to make sure you do it in a way where you actually learn from, because let's be honest, you're most likely going to be losing this account. Okay, you're not going to get funded and make millions of dollars without the experience, without the knowledge, or without the experience. So most likely you'll lose this account. Now make sure that you lose it and you learn. Make sure you learn something from it. Okay, and how do you learn something from it? Well, first of all, let's try to keep the account for as long as possible. So one, understand risk management. Understand risk management. Risk a tiny amount per trade. Risk so little that you can have 30 winners in a row and not lose the account. Okay, because you're gonna get there, right? Your drawdown is gonna be huge. Make sure you don't lose the account, because what you can do then is you can go in and you can look at the trades. You can look at all the trades you've taken on this account, and then you can look at what worked, what didn't work. So get a trading journal. You can use Edgewonk, you can use TradeZilla, or you can use paper, pen and paper, whatever. But make sure that you follow the process of each of the trades that you're taking, and make sure that you understand what is working and what's not working, because you want to make sure that you stop doing the things that is not working and you want to keep doing the things that is actually working.
Yeah, and like Jonatan said, be prepared to blow the account. It's part of the game, really. And I don't know any successful trader who hasn't lost an account, honestly speaking.
That's right. Yeah, all good. Okay, so yeah. I like how we're here. Mike wants to talk with me in the backstage, and you can't hear him, but I can hear him. But then you can hear me. It's an vision. Now something happened with. Well, this is it's interesting. Let me do this. Right. Yeah. Seems to be some technical issues going on. Not sure why or what's going on here. Oh, Dirk's electricity just went out in his office. Yeah. Yeah, and I was thinking like, what's up, Mike? How's it going? Welcome. I was thinking like,
what have you done to my beautiful layouts? What did you do? All of those nice widgets that I built you, and you just got rid of them all. What did you do? What did you do?
You're live. You're live. We're live.
You ungrateful so-and-so. My goodness.
These are things that we should take in person. Personal conversations. But yeah, no, I do like the widgets. I do like the widgets. It's just that I'm trying to make changes here. Changes are good. We all like changes. It's a good thing.
changes. You're making a tribute to Ozzy Osbourne there.
Yeah, exactly. No, we're trying to. I mean, I can open up your chart here, and you'll see. It's all.
I think we should do a vote.
Yes,
people,
exactly.
Right?
Exactly.
Guys, tell me, what do you prefer? Do you have this layout where Jonatan has just deleted everything, or prefer this one where you've got more information? Just everything just looks cleaner, doesn't it? Surely this is a better one, right? I know which one you're going to choose. I know you're going to choose mine.
Well, okay. So be honest, guys. I'm gonna do a poll right now. I have a poll in the comment section. So this is Mike's layout. Do you like Mike's? Well, now you changed it.
Well, all I've changed is just changed our cameras.
Okay. So do you like Mike's layout, which is this one, or do you like my fabulous layout, which is this one right here? Which layout do you like the most? Now remember, my has a bigger screen. On my layout, you actually see the screen. Okay, you see the screen, and you see the trades, and you see the analysis.
Mine you can't. Mine, you can see it as well.
Okay, well, let's go to your screen. Let's go to yours. You guys like this one more? Yeah, they like this one more.
Oh, hang on. 50, no, it's changing. It's 56.
Yeah, it is changing. So that's what I'm thinking. You like this layout, or you like where it's like less space?
Oh, guys, you like mine? Mine's just clean.
Like Mike's?
Oh, no, like it's 50-50 now. 50-50. Come on, guys. Come on.
So what I'm trying
that mic button.
What I'm trying to do here is basically we're trying to create a layout here where there's less, so there's less space, there's more screen, I mean, obviously this is not a beautiful layout. I've just moved some things around, but what we're trying to do here is we're trying to create a layout here within this live stream where the screen gets as much space as possible, while also trying to squeeze in all the other things, which is not an easy task, if I'm going to be honest. It's there's a lot of things on here, and we want to make it as
the majority of people. If we look at the stats, the majority of people are either watching on their TV, their PC, or their laptop.
Yeah,
they've got. It's not like they're watching on their phone. Yeah.
Yeah.
Don't know. You know, I mean,
yeah, no, I mean, it's all about testing. It's all about letting the audience, asking the audience, letting what they like and what they don't like. Nora says, "I don't like when your faces are small as ants." Well, me neither.
Like that. I don't
like that either.
The only reason I did it like that was because there were complaints that we had to move our cameras around.
Yeah.
Like that. So that was the only reason we did it like that. But we can have it like that as well. That's easily done. It's easily done.
Is LJ joining you today?
I hope so. He's supposed to be.
Right. Because I got to go.
Unless he said, you got to go?
I got to go, man.
All right. All righty, guys. We'll be back right after this. It's time for ABL once more. Dirk, I don't know. I see you're back, but your session's over. I don't know. Are you rejoining us or what's happening? You can talk to us. We can hear you.
Electricity was cut off just now. Yeah. Hello, everybody. I wanted to say a proper goodbye because I suddenly was cut off because the electricity went off here in the office. So you're in the capable hands now of LJ and Mike. So see you again latest next Monday, everybody. Bye-bye.
Catch you, Dirk.
Oh, dear. Oh, that was fun. How is everybody? Let's turn this music down a bit. It's a bit loud. There we go. That's a bit better. Is it all running smoothly for you?
Mine was lagging a bunch. I couldn't get in for a while.
John's messed around with all this. He's messed around with all the layouts and everything. And ever since he messed around with the layouts, it's all gone Pete Tong. It's just gone completely AWOL. I don't know what he's done to it.
I had the same problem with my camera not working. So I had to restart a couple of times.
I don't know what he's done. But anyway, let's get straight into the chat, shall we? Nora doesn't like our faces like ants. There you go, Nora. This is the ABL layout, right? This is our exclusive ABL layout where Jonatan has no influence, he has no power, and we take over. It's the ABL X / multiplied the 5ers. So yeah, we got Akram in, we got Louis, we got Stephen, and we've got Van Alvan. Welcome, and Van Alvan. You are most welcome, Nora. Nora doesn't like to see our ant faces. She prefers to see us in full HD, I guess, or whatever she's got on her TV, I guess.
This reminds me of Zoolander.
Yeah. So yeah. Van Alvan saying, what's Van saying? Can I ask you guys how many lots, let's say average lots, that you used for buy or sells? Impossible question to answer, Van Alvan, because it depends on so many different factors. Size of your account, your strategy, and also what assets you're trading. So give us a bit more specifics and we can try and give you some answers, but otherwise it's a bit... ABL don't ask for permission. ABL make the rules, and then we break the rules, and we just do as we want. Magnus is saying the Russian is here and joke with you. No idea what you're talking about, Magnus. Absolutely no clue whatsoever. We got Deanna in, we got Kim in. It's Ori. I don't know if it's. I don't know what it is. But basically, Jonatan didn't like the layouts before, so I did a whole ton of work on Friday to refix them and redo them. And then he came in today and he's redone it all over again, and he's messed around with it again. So I don't know. I've cleared my cache. I've reset my computer multiple times, so we'll see. But do you want to see my new tech?
Yeah, okay.
For my AI and my coding and everything, I've got. Oh, you can't see the other one. Hang on. Yeah, there you go.
What on earth is that? They look like home security systems.
It's a Logitech MX something or other. Basically they're magic keys, but like totally programmable for all sorts, and you can use it for volume control, for design, and all sorts of stuff. So the keys on there, you configure the software, and what appears on the key changes depending on what application you're using. So you can set it for like shortcuts with copy paste or more complicated things. Anyway,
so kind of like the what's the one, the Stream Deck type thing, but not
unlike Stream Deck, yeah. But it's got this thing which is pretty cool. So it's got like this spinning wheel and other bits and pieces. So,
nice.
So we'll see if it's
micro DJ decks, right?
Exactly. Yeah. So yeah. Ahmed says it's his favorite pair of the channel. Wow, Ahmed, I'm feeling the love, man. I'm feeling the love. Thank you. Ulysses trader. Any chance we'll be able to trade with 5ers on DX trade in the future? Who knows?
Not sure.
We don't have the answers to such questions, but what you can do is you can go to the 5ers Discord community and post it as a suggestion. And if loads of people comment and like it, then you never know. Everyone wants to see Mike's new haircut. Yeah, that's exactly what it is. Exactly what it is. Do you know my haircut took half the time my son's haircut did? And it wasn't because my son was fidgeting or anything else. I don't know why, but the woman who did mine literally just went done. I was done in like 10 minutes. I have a feeling she just did it really quickly because she could see my son was about to be finished, and she was like, okay, this kid is gonna like wander off, so we better get this guy out of the way and done. So yeah, that was my Saturday morning. Faisal's asking, are we going long or short? I'm late. We're going late by the sounds of it, Faisal.
We're going long and short.
We're going long and short. Short and long, and trading the range. Look at that range that we've had on the 5 minute today. We've just been bouncing around. We've got this nice target here still. On the 15 minute, I've got to say I liked this reaction here. I did catch some scalpy buys on the way up, but we've now stalled, and we're now just hanging. So we'll go and look into gold in a second. And Nikolai's asking about gold as well, so we'll take a look at that. Akram says, plot twist, those are the market maker sell and buy buttons. Oh, Akram, if only that was true. If only that was true. Oh my God. Oh dear. DJ Mike, exactly. Do you know, it's funny, like Modest Mike and all this stuff. I used to have various different names. Like there was a guy who I knew who we used to call Big Mike. There was a guy who runs a bike tour company, and we called him Bike Mike. Then there was another guy who does still run, in fact, a tour guide company, but his company was called Crazy Guides, and they take you like on communist tours around Krakow in like old like Trabant cars that are about to fall apart. And so his company was called Crazy Guides, and so he called himself Crazy Mike. In fact, he still does, as far as I know. And so there was Bike Mike. I was Trike Mike because I used to ride around on a tricycle delivering newspapers around the city. There was Crazy Mike. There was Big Mike. There was just, loads of Mikes. It's a good name. Good name. But yeah, maybe I need to be DJ Mike. I don't know. Or I feel like I need to be more AI Mike with my leaning into all the AI madness that I'm doing.
Yeah.
So yeah. Anyway, enough of the Mike madness. What are you thinking about gold, LJ?
Gold, yeah. I mean, since we're coming up, like we were talking about, we seem to have, stabilized that bottom. Didn't get any kind of fresh low per Asia. So it looks as though we do want to sort of gradually build up and move to that higher leg, about 3,400. Definitely seems to be the way right now. I would like to see a pullback. If I was going to look for a larger move outside of just playing the kind of 1 minute, 5 minute range at the moment and just taking picks out of the market, I would like to see that deeper pullback to about 33.30 or so before really taking a bigger run higher. Today though, it doesn't seem like we really want to do that, unless that change is coming into New York. Right now we seem to be favoring slight upside bias, so
it's
euro and pound are kind of looking similar too, so
do you think we're going to get more of a pullback?
I would like to see it similarly with the euro in particular. I think pound obviously would pull back in kind, but the pound's definitely got a bit of a better structure than the euro right now. So I am short the euro at the minute, looking for a move back to basically the lows that we came off from the payroll on Friday, as a first point of call, and then see if we can come a bit lower through there to about 115, that round number. Because we were looking as though we we're starting to come off. Obviously, in this past sort of 15-20 minutes, we've turned around again and taking another little stab at the upside. So somewhat similar to gold price action today as well.
What's interesting is just I haven't had a chance to look at Euro USD yet. This was an idea, a trade idea that I had on Thursday, I think it was. Obviously, NFP completely negated it. What's interesting though is the news on Friday for NFP. It gave us a wick on Euro USD, but it didn't give us a wick on gold. So, suggesting that actually the dollar weakness may well be in to stay. If we look at how it formed here, let's see what's the basis of it on the 1 minute, because that will tell us really whether. Yeah, started with an inside bar. In fact, no, it started with a perfect equal low, in fact, but it's not. It's just slightly higher. So there is an inside bar down there. If we look at the half an hour, take it down to there, you can see it didn't really create any kind of structure as a support. So I can see the sells coming in. I can see the sells coming in. And I think it was like we were talking about this morning on ABL. The markets don't really know what to make of Friday's news. It was kind of a shock, but if they based their entire decision to short the dollar purely on Friday's numbers, is that, that just seems like a risky move, right?
Yeah, with the revisions, it's definitely a terrible number. So the payroll number itself was a bit weaker, but obviously it was the revisions to the prior 2 months that really, pumped that dollar selling, right? So since then, though, I mean, the move was 180 points, right? And where we topped out at 115.95, 96, that's 195 odd points. We got almost 2 cents there. That's a pretty big move. And if those numbers are correct, that is probably valid. But at the moment, it's hard to even read through how much stock do you actually take from those numbers. Is it going to materially change anything for the Fed or the forward outlook for rates in the dollar right now? Or are we kind of too late? Coming towards the end of the year, we've only got X number of Fed meetings left. So therefore, do you just kind of go buy the buy? And do people go, look, we had the same deal last year, we got revised way down. As long as unemployment isn't completely falling apart, the actual unemployment rate number, and then the headline number just shuffles around constantly. There's clearly, miscalculations with seasonality and the revisions, that kind of stuff.
Yeah.
It's, I think until we get any kind of comments from Fed members around what they make out of it, I think it's fair for dollar to keep selling, but we probably need a bit of a pullback after such a pump.
Yeah, it's I'm just looking at the start that we had on Euro USD. I mean, it was a pretty sizable shift down, but there's a long old trail, and the high of it is actually a perfect equal high on the 5 minute, suggesting it's not a particularly strong high. I also think we might have another one here on the 3 minute. Yeah, we've got another equal high there. So I would be very, very cautious trying to catch anything on Euro USD right now, because you've got higher time frame liquidity down here, but then you also have lower time frame liquidity here. So what you might see is us do a little bit more of a pump up to this area around the 2360, or even up to possibly the 165. That seems like a bit of a stretch, but maybe for today it might just be, the market's just trying to bounce around here and just trying to figure out what they want to make of the news from Friday. That wouldn't be an unreasonable expectation. If we look at it here, it's not a strong range, I would say. It seems rather wavy, but the fact that it started with an equal high on the 5 minute, I would be looking at least for us to come up to this kind of area here. And if we look at why that is, It's this structure here on the 4 hour. So we had this pull back down, try to break down, this act as support. So it's a nice area to see, again, maybe another reaction in that little pocket. So we'll see. It was the same on the 7 hour, dipped down once, dipped down again, and then shot off. If we look at the 11 hour, again, the 11 hour also shows a nice engulfing candle. So if we expanded it out to there, made it into an 11 hour zone, then that might be the kind of pocket that we look for in and around that area.
Yeah, I think so.
Because I mean, if I look at Euro USD on the higher time frames, we've got a massive push down, like considerable push down from from Monday last week, in fact. Right?
Yeah, we got
so. Yeah,
that was also what lent to the massive uptick as well. Everyone was so heavily short from there. I think through that week, the pound was down. We were down like 650 points by Friday.
Yeah.
In 1 week, like absolutely annihilated. So,
I mean, if we look at it,
because everyone had really flipped to that idea of the Fed on hold, dollar coming back. We were going full that way, and now the payroll number and the revisions have massively put that into question.
What is interesting is if we look at Euro USD, right, we haven't taken the high from Friday, not yet anyway, right? We've only just come very, very close to it. But we are sitting at that 50% level of the move that we had pushing down last week. So, it's not the full 1 week candle, let's say. If we do the 1 week candle, then we're actually just sitting above it. But I mean, it's pretty much the same in the principle of, right, when did the move start pushing down? Well, it started here. So that's where you would mark out the 50. So realistically, you could either see sells already coming in now. And this is just, NFP was just the catalyst for people to reposition. And to catch the strength in the dollar, and then we see further sells. I don't see that being beyond the realms of possibility, if I'm being honest with you.
And looking at that on a weekly, like this week's close for that candle is going to be pretty telling. So I'll definitely be significant. If I jump over to my chart for a sec. Basically got this trend line coming through here from the highs earlier. We've tapped into a few times today and seems to be respecting that. So we've got yet another test through here. So I'll be basically making calls that this holds, we fail, come off. On the other side, if we start to run that and run the highs just earlier from Asia and early London, right? Then you'd be driving higher. But right now, I'd still favor a bit of a pullback down to this 115.20 to 115 area somewhere. Just after such a run, I think the pause and the digestion is probably what's more called for at the minute.
Yeah.
So.
We've got a couple of comments from Akram and from Magnus as well, talking about the DAX.
Yeah.
Stephen, we'll come to your question in a second, but do you want to put up the DAX on your chart, LJ?
Sure.
Just while you're doing that, Stephen is asking, LJ and Mike, as a swing trader, it is advisable to, when you are in a long trade and then it's going pretty well, to add more trades to it, or it's a bad idea? That really depends on your strategy. And, by swing trading, are you talking about daily? Are you talking about hourly or 4 hour? It's we need more context to, there's nothing wrong with adding to a good position, right? If you're confident that your swing position is a good one, let's say for example, you're trading the weekly, let's say, right? And you get in a certain position and you see a pullback on the 4 hour or on the daily, nothing wrong with getting a better price, right? Absolutely nothing wrong with that. But you've got to be confident that your higher time frame analysis and your positioning, your risk, your stop loss are all aligned to that, right?
Yeah.
So don't be going in full margin and just throwing everything but the kitchen sink, or everything and the kitchen sink at it, because you're then just setting yourself up with no maneuverability, right? So if you go in with a position of, let's say your maximum risk that you want to put in is 1%, and you think that you'd rather get in, say, at certain points, then break your 1% risk into, say, 2 pieces or 3 pieces or 4 pieces, and each position have 0.25% or 0.5%, and that accumulatively adds up to the 1% risk overall. And then you'll position yourself with better pricing, and you'll end up getting a better profit from it as well. But I would say you really need to understand your strategy and back test it and see, can you see the opportunities to get in on those, right? Because sometimes we see a move like, let me give you an example on that gold earlier today. I saw us just dip down on the 15-minute, and I took 3 scalps. And those 3 scalps were just very, very quick 1-minute scalps. Just this dip down here. That was all it was. Just took a quick scalp from, where was it? I took one which was about, I think it was just as we wicked away from there. I think I took one there, and it was up to there when we started to push back down because we're at the 50 level. Then I took another one from there, something like that, but actually with a wider stop loss. And then I think the third one was somewhere up here, and I took it up to there. Just very, very quick scalps, but you've got to know what positions you're comfortable with doing that. So back to the
I think adding to winners, definitely a good idea. That tends to be a hallmark of good traders. Add to winners, cut losses early, that kind of stuff. The question will always be, depending on everything else you're doing, how much of a good position is that trade in? Has it fully ran on? Is there more to capture through it? Do you have an appropriate level to add more with relative new structure being built over time per the swing trade? That you can simply identify the next key points, perhaps bring the stops of the original trade right up, because it's going to depend how much extra risk you're putting on the board. Because the flip side to it is you can turn a good trade into a bad trade by adding when something pulls back, because it might just pull back temporarily. There could be some kind of market anomaly, Trump, anything like that pops off, and if you had just the original trade on, you'd still be within your parameters. Adding to it as taking you outside the parameters, you have to cut the thing, and you've turned a good trade into a bad one. So there's always those conditions to take into consideration, but generally, yes, adding, especially with swing trades, adding to them is generally a good idea.
Yeah, Nora's saying she's been reading Tom Hugard's book, and how he adds to winning positions instead of just taking profits at certain points and letting the rest run. This is there is no, I know there's the silver bullet, strategies and all these other things. There is no golden goose that it just lays all the eggs for you, right? You've got to find all the different pieces to the puzzle that match for your puzzle, because you as a trader, your approach is what works for you. How I trade doesn't match with how LJ trades. But funnily enough, quite often we'll take the same trades, right? But our approach, our stop losses, our risk, everything else is totally different, because it matches maybe with our personalities, matches with our back testing, all of those things. So the key thing is always going to be understanding that back date, that back testing data, and it can be forward testing as well, right? I don't believe that you have to back test. I do believe that there are different ways to educate yourself in the markets, and it doesn't have to be back test. It can be forward testing, as long as you're prepared to put in the investment of time and maybe money into learning that, right? but that's, I think, the key way to look at it. So yeah.
DAX.
The DAX.
Yeah.
And Ahmed will come to...
Sorry.
No, I was just saying we'll come to Ahmed's question afterwards, but let's have a look at the DAX first.
Sure. Okay, so this is the daily. So basically the pullback we had after, obviously sort of spurred on by the selling in the S&P and the NASDAQ on Thursday and Friday. At the moment, though, the structure still looks sound as far as the DAX is concerned. We've got this guy here. So you got higher low. We've still got marginal higher high through that period. I will say you can see, though, that this overall momentum is starting to decelerate somewhat, right? You can see the moving averages as well pulling back a bit more sharply than they had prior. This period as well often does end up being a bit of a down period for stocks and for indices in general over the summer break for Europe. And we have had a pretty extensive run. Furthermore, with the stuff we were talking about, the NFP kind of worries last week with the revisions, people might start reassessing what that's going to mean as far as the employment complex and therefore company profits, particularly in the US. Obviously, the US being the big daddy in the house, every other indice is tending at the moment to take kind of cues from the S&P and the NASDAQ overall. And so we've got this kind of global, somewhat synchronized move up or move down. And part of that is due to that the degrees of uncertainty that is still out there. So right now, that's sort of where we are. For the moment, that's still holding up. If we drill down to 4 hour, we've had a bit of a pickup today. We've obviously got these underside levels here, which have now become resistance. Prior support turned to resistance. So that's going to come in about 23,900 or so on the DAX. So you got a bit of room higher. This sort of area would then be your test point to look at for any kind of continued movement or else a potential failure and draw back down. Managing to get legs above there, obviously you're going to be looking for the all-time highs again. And that's kind of where we are with the DAX. So in particular,
Sorry, go on.
I was going to say, keep an eye on the S&P and the NASDAQ as well to take cues from there, because that seems to be the main leader. We've kind of got some kind of legs with where the tariffs are going to be per European Union and some of the surrounding bits there. We did have the other portion being the subs being moved over by Russia over the weekend too. Market very much seems to be just throwing that aside as though it's just a saber rattling, chest pounding, nothing material is going to come from that.
I did see that China and Russia are doing war games at the moment in near Japan, supposedly. They started that today. So
wonderful.
Putin and Xi are playing computer games. So
you sunk my battleship.
Exactly. Oh dear. Guys, you either laugh or you cry at this madness, I tell you. Gold has made a massive pump in the last couple of minutes. Do you want to quickly just pull up gold?
Yeah, sure.
And it's taken those highs. I'd be careful because I know a lot of people will be looking at it going, oh, quick, sell it now because it's creating this wick. I would be careful. Just be careful. It does look appealing, but it's leaving a lot of liquidity still on the higher side. The 1 minute is also appealing. I think it's going to whipsaw a couple of people. So I'd be just careful with gold right now.
Broke the relative high from Asia and from early London, right? Just by a touch.
Yeah.
But I'm kind of feeling like this is more of a fake out move. And then to come off, I think we just saw basically a similar thing in the euro right now. So it's going to be a question of, does this actually mount some kind of foothold here and then drive higher? We've now cracked that line through there that's sort of been tested a few times and been respected. The pound as well. We've come up basically to a almost double top, at least for today.
Yeah.
Almost up to the highs of the spike from Friday, but not just yet. So it appears, I would say over the next, say this to the end of this half-hour candle, so the next 2 15-minute bars to complete, it's probably the test point to see if we actually drive further, or if this ends up being a fake out and then we crash back off.
Yeah, I mean,
there's no other news on the cards today, so
realistically, on just even on the 15-minute as we are right now, there's only just under 4 minutes left on that 15-minute candle, and the one that it's testing was an engulfing to the downside. So if we see a significant push down, then that does indicate that the sellers are coming back in. There's a lot of liquidity down below that move created. So it just didn't get as high as I would have liked it to. I would have liked to have gotten higher before selling, because it has left a few levels higher up on the 2 minute and the 3 minute. So I'd be looking for sells kind of at 365 as a nice round number, rather than where we are right now. So we'll see.
I'm just checking. All the VWAP levels are definitely a bit lower. We're closer to 33.20 to 33.30 at the minute over the past from the start of last week. If we take the prior week into consideration as well, then we've got relative support from VWAP at about 33.45, which is sort of where we did bottom earlier today. So, but yeah, I'm not convinced on a break higher on gold until we actually push that wick. I'd be pretty skeptical.
Yeah.
So, I mean, that is a drive and a half right there. That's huge.
Yeah.
So,
yeah. I do think we're going to see shorts, but it's just a question of catching them at the right time. So I'd be very, very cautious. 1 minute has just taken an inside bar on the 1 minute. It's just a question whether it's going to go higher. Ideally, I want to see it come to 365. 365 just gives us a nice area, and it's pushing for that at the moment. So gives us a strong 15-minute candle though. So it's a question of whether in the next couple of minutes, next minute and 15 seconds even, whether we just see a massive just grab of that liquidity and then just a plummet down, which we all know gold can do very, very quickly. It has this tendency to just go and grab something and then shoot. So
yeah, because like say you look at the hourly and stuff, I mean this looks quite bullish, definitely. But the trouble is after that kind of a pump, how much more momentum can you get it into it today? That's a whole other question. So,
especially when there's no catalysts to push it other than Trump waking up and deciding violence.
Yeah,
choosing chaos, right? And the Trump chaos theory.
So feeling left out with the battleships. So
exactly,
go send his own.
I've got my battleships. I've got my submarines.
Let me play, guys.
Let me play. Let me send my submarines in. It's not the cleanest of setups, but it's rejecting away from a level at the moment, not as strongly as I would have liked it to. So I'd be waiting still. I still think it's going to come for that 36,469, where it is right now. We're still only 15 minutes into this current 1 hour candle as well. So suggesting that there's there's ample time for us to have this 1 hour just shoot down, right? And you know, really come for those lower levels in that imbalance, lower down in the market. So yeah, we'll see. Diego's saying, I feel like gold might go higher when I look at the daily chart. Yes, it could do. I mean, we talked about it earlier that it's kind of sitting just above that 50% level on the fibs. So it might come up to kind of the, depending on which way you look at it, the 38.20 or the 61.80, which sits around about kind of 3.76, something like that. Just looking at that big push down. So certainly that is possible. It's just a question whether we see that rejection or not on the highs that we've had. At the moment, is still pushing higher. So I'd be hanging on for the time being and wait and see how it wants to play out.
1-4 daily all very much look quite bullish. After that large pump from yesterday, it negated the shot of us running down here, down to that 3K level. So yeah, again, like we were saying, that definitely seems to be the direction we're sort of set in now. But as far as like intraday moves, how much more legs do we have in it before needing to at least pause, you know, take a breather before running up.
Yeah, exactly.
Because all the moving averages are just catching up at the moment still as well.
Yeah. So I mean, the key thing is to look at previous levels. You know, the good thing is we're not at all-time highs, so we're not kind of scrambling for ideas and areas where we think price might react from. We know where prices react from at this level a few times now, but it does still leave you know, question marks potentially as to whether or not we're going to start to see sellers coming in. We're just at that high. We're just at that high right now from like overnight this morning, basically. So it's just whether we've just taken it. So we've just taken the high from this morning, the Asia high. So it's now just a question of whether we're now going to keep pumping. It's quite feasible. But then that is a massive pump already that we've had. So as you say, are we going to be just so overextended? We'll have to wait and see.
Yeah, it's a similar deal with the Dixie. Like where we are now, like this looks like we want to just full breakdown from here, right? But I'd be pretty dubious because this is basically an air pocket.
Yeah.
You know, we'd have to be running down, you know, 80 points or something. Which therefore euro up at 116.70 odd from where we are, which is probably a little bit of a stretch right now for today. I'd say we get some kind of a pause, bit of a fake out-ish type thing, retrace from here, and then have another run throughout the week. Yeah, I think there's too much trapped liquidity from that pump on Friday. So. Pound is definitely looking like he wants to fly, though. This is the counter portions, right? When you drill into some of the individuals, the pound looks ready to pump.
Then for the pound, what's the reason for it to pump? What's the? I mean, the pound today is pumping already. I mean, it's up 0.6% against the Swissy, 0.26 against the yen. 0.2 against the New Zealand dollar, 0.23 against the US dollar, and it's 0.16 up against the CAD. So it's not, the pound isn't down, the pound is already up on the daily at least. The question is, okay, if we're going to see that now, what's driving it? What's bringing strength into the pound?
Yeah, it's just general retracement. I mean, we've got that 600 odd point move almost from the tops up here. You go even further back, you know, we've just gotten killed from up here at 137. And then last week's move alone was about 450 points. So I think, just a natural retracement of that. We've come right up to the sort of spike highs now, had a little play around there. from Friday's levels. You've also got that wick there, and then the undersides here turn to support. So my feeling is this is going to be a fake out. I don't think we have the drive today, the impulse to get well beyond and move up to 133.60. Similar deal with the euro. People coming into this stuff, we're at relatively the start of a new month, right? The month obviously started on the Friday, but people now thinking about where they're going to put their books. European summer is firmly sort of in swing. So I'd be dubious if we can get up that high. Sometimes you can move a bit more with European summer because there is a bit less liquidity overall in the market, so it takes a little bit less volume to shift price. But today I wouldn't be betting on
gold's
that.
Going higher. Gold's just broken out of a previous structure that I thought would be held. Gold is choosing violence today. Gold is going for the highs by the looks of things.
I think that's what everything's sort of going for, and then see how we react from there. So we're almost there on gold now.
Next stopping point for gold. Let's have a look. Yeah, I mean, on the 5 minute, I'd like us to just break above. What's that? 368.99. Ideally, but just looking at the move that it's making right now, it just looks so overextended. Really,
really. You have to start, asking. From there, what do we pump to 3,400? Where's the?
Yeah, for me, there's too much imbalance going on right now.
You've got maybe some interim points at 33.75 or so. As just like a little overextension or something, but and that midpoint at 33.82. That was relevant before, but it just seems a bit much. Like if you're looking at this, I don't feel like I'd want to be buying into this right now at all.
No, definitely not. Most definitely not. It is going to be interesting to see what this 1 hour candle wants to do and whether it's going to find some kind of resistance somewhere. Where it is an interesting little pocket at the moment on the 1 hour. But yeah, it is this kind of curious little order block area where it's paused for periods at this time and just kind of decide which way it wants to go. So be interesting to see how the next, as you said, the half an hour was going to be key. The half an hour has just shot up as if somebody had stabbed it in the leg with an adrenaline pen, and it's just flown.
And draw this straight up. There we go. So yeah, this is kind of what I'm seeing, what I'm calling now. And so euro, this to be a bit of a fake out, come down, slight little, back and forth there in between, and then down to this lower leg. Similar deal on gold, run back off, come through into here, those prior heads there, bounce up, test the underside again, back down, about 33.20. That's what I'd like to see ultimately. Depending if that momentum carries through once you get down to this 33.35 and the prior small retrace point at 33.40 after the actual NFP on Friday. But yeah, I don't imagine we pump high from here. Same deal with pound. I think that'll end up capping the move for now. So I think the pound will have a bit more of a shallower retracement. We'll probably sort of just play back around this 132.60 area, consolidate through here, and then once the euro, everything does its move, then we go up. Similar with the dollar yen. like this doesn't look as though we want to go, new lows just yet. This
No.
very much looking at the structure here, sort of pause somewhere through here, and then a bit of a retrace as well up to 149. So I'm kind of seeing that across the board when you look at everything, right? So
I've got to say though, gold even just on the 5 minute, it doesn't look like it wants to stop right now.
I would say we'd probably consolidate this final 5 minute bar just here, and then that rolls the 15 and 30 minute as well, right by these tops, and then possibly then into the final half hour of this hour, pull back, create another wick just like the corresponding one over here, and then we start to drop off. That's what I'd be seeing. So Louis, gold does what gold does, yeah, that's for sure.
Gold does what it wants to do, doesn't it? Gold do what you want to do.
Born in 2944. You're a very, very generous man. Bit of philanthropy right there.
Do you know what? What would we do without you, man? The markets would crumble. Right, sells I think are in. Just done a nice reaction on the 1 minute. You might see some sells now, but I don't like the 5 minute or the 7. A 10 looks all right. So sells on gold right now might be okay.
Yeah, I think we got on the 5. I think that's looking all right. It's a pretty big pump. Even just from a stochastic standpoint.
Yeah.
We don't really have a catalyst to push things beyond, statistical deviations today. So when we do get to those levels, you're likely to then rotate.
And we're not getting any red folder news today. We're not getting, you can see the financial juice widget to the side of our screen. There's no red big label news coming. So this is pure market manipulation for, let's call it what it is.
Just,
right?
Technical trading, shifting books around, whatever.
Yeah, exactly. Let's also not forget that it is the first Monday of the month after NFP as well. So, we're starting the week. Friday was a bit of a strange one because it was the first day of the month. It was NFP Friday. So, as much as we say, NFP Friday, avoid it and everything else, but Fridays are still low liquidity. So that would have also impacted things. There would be some people that would have been caught offside by it maybe. So I don't think anybody expected those results.
And just after everyone's shifting the other way in particular, which is why we saw all the majors come down multiple hundreds of pips just in the 1 week.
Exactly.
Only to be slapped and turn right around. So
precisely.
Yeah.
So yeah, I think the advice is just don't go all in on anything right now. Just wait and see, frankly.
Indeed.
What are the options telling us, LJ?
Yeah, I was just going to check for today. If we go to NASDAQ, options charts, we're looking at 22,764, thereabouts. Cool. Currently sitting 22,950. So that would imply that we get another move back down coming to New York. So potentially we could get capped somewhere in this area. This was the point just before the payroll, obviously last Friday, where we crashed off. I think we're in a bit of a downdraft for indices in the near term. We're up, how much today? 0.8% from the open after closing pretty low, and a weekly candle that didn't look very nice either. So I think we've got a bit more downside. That levels out with the options as well. Back down to the lows. Potentially test that as support again. See if we can find a double bottom through there, and then move higher. But I wouldn't sell just yet. I think we might have a couple of points to come up before that. That's a potential trade there. So yeah, I think people are starting to, again, comes into everything else we're saying, starting to question, the strength of indices, how much we've already pushed on, and the forward outlook for company earnings and consumer staying strong.
Interesting news just come out that Tesla's brand loyalty collapsed after Musk basically backed Trump, and apparently that data, so that's just data released today, and that's coming out the same day that Tesla has awarded Musk $29 billion in stocks. So I'd be interested to see if there's, I mean, at the end of the day, Tesla's going to move things in the NAS as well. So it'd be very interesting to see whether that moves the wider NAS or not.
Yeah, I mean, as far as the stock options, I think that was that piece from some time ago, where it was meant to get like 60 billion or something at the time.
Didn't it go to court?
Held up in the Delaware courts, where they got opposed to it, and then he was saying, I'm going to leave Delaware and all this. I don't know. I haven't followed the rest of it too closely because it's just a mess. So Tesla is up 2.2% today though in pre-market futures. So
Ank, do not try and long gold where it is right now, mate. Wait for a breakout or something. Right now we're still hanging. I wouldn't try it and long gold right now, because it's very, very easily gonna just sell off, because it's really, really overextended. So I'd be very, very careful. Very, very careful. And Warren, we've been talking about EU for quite some time, but LJ, do you want to quickly remind everybody what your thoughts are on EU? Sorry.
Yeah, so EU, I'm seeing a bit of downside. We've had this massive pump up. It's about 200 points up to the peaks of that 115.96, 97 from the 113.96 or so down here. What were we? 92 that we bottomed out. So just over 200 points. Obviously, that was after getting caught out with the NFP stuff, like we've talked about, the revisions for the prior 2 months payroll numbers. Everyone was heavily stacked the other way through that week, moving back into the dollar, seeing as the Fed had communicated their rate cut timeline was definitely to the later stage rather than pushing it up to September anymore. Once the NFP came out, those September numbers jumped way back up as well. We've seen euro pump through there. A lot of people caught out. From here though, we probably need to see a bit of a pullback. I'm looking somewhere down 115.20 to 115. 115.20 is basically where we pulled off to on the Friday after the initial payroll chaos. Then into the close, obviously we rallied off that. So I'd like to see another test there, see how we play around that area, if we can form support again there and then drive higher. As far as today's action intraday, I think this is a bit much. We've got basically another equal high to the Asia early London period through here, and we've respected this trend line from the highs up there a few times, tapped into it several times, broken just above. I think this is a bit of a fake out, and then we'll see a move lower. So you can see a number of the moving averages have all sort of clustered around each other now. The 50, which is the blue, has now actually moved under. 100 has moved under the 200, and you got the 20 down here as well. So that is indicating the momentum very much slowing. So I think we'll see similar deal with that. Same on gold, same on the pound. See us come back off.
Yeah.
And then when we look at dollar yen as well, you'd also have to assume then dollar yen, if euro, pound, everything else is going to run higher, dollar yen probably makes a break for another leg lower, which at the moment just seems a bit too much to ask right now.
Yep.
So I think we'll get a move higher in those guys as well. You're seeing it across the board. Often when you tend to see that, everything's moving in sync.
Yeah, exactly. question. I know you talked about pound USD earlier. I mean, you were saying that you think pound USD could be long. Are you expecting the same kind of pullback then on pound USD compared to euro and the others?
Yeah, so similar deal as far as a pullback on the pound. Just I think it'll be a bit more shallow than the euro, more shallow than some of the other majors. That in part because of how heavily it got absolutely annihilated last week, well beyond the pale of the other majors. So we are due for a bit of a retrace in that. It was also particularly odd where the UK, as far as the trade deals, actually got a pretty good deal compared to a number of the others. Pound still got really hammered. So it might be a little bit of a overextension. We can see the structure on the pound is definitely a bit better than the euro at the minute. Got the high lows coming through, but also some relative high highs. The euro's got some of these higher lows and then an equal low, but then we've made lower highs right through. So I think the pound just structurally is positioned a bit better. So the retracement will probably be a little shallower before the drive higher. That said, the volatility on the pound is quite large. So if you think about the total pip moves, it's still comparable per the euro right now.
And Warren, LJ literally just went through it. So you asked earlier and he gave you the answers. So go back and have a look. And born in 2944 says he's back in profit and he loves the crazy markets because he's crazy. Doesn't, from what we know of you, it doesn't surprise us at all, my friend. It doesn't surprise us at all. So
that's basically what I'm looking for on the euro, just by the way. Right there. So I'm currently short, a first short from here, which was over on this breakdown here, and then I've added to those shorts on the upside break there. So there you go.
So there you go, guys. Should we have a look at crypto? We haven't looked at crypto yet today.
Yes, we can. Bitcoin bit beat up last week. Let me zoom back out a little. So we were talking about this channel forming through here, and we had held up reasonably well. I think when we were last talking about it, we were pressing the top side sort of through here. And I was saying, I'd probably wait for some kind of move back down here into this lower band before getting long. We ended up overshooting that a little bit last week, obviously due to the large payroll chaos and over the weekend, right? Since then, we have started to rally back. I would say people are still interested in buying crypto and buying Bitcoin. We're still generally in that upward trend overall. I think Bitcoin's the second best performing asset this year. 24%. Gold's at 25%. So when you got the NASDAQ, S&P and stuff up like 11% from the beginning of the year, crypto's still looking pretty favorable. So. Do
you think that's an indication of the sentiment towards particularly Bitcoin being being less risky as people thought it was? Like it's more of a legitimate asset now, whereas before it was like it's a scam, Do you feel as though there's more legitimacy coming into it, and so therefore people are seeing it as, do you know what, this is the digital gold?
Yeah, I think there's part of that, and I think also just generally seeing the wider traditional markets, say stocks or indices, that kind of stuff, people are also seeing them as slightly less legitimate, slightly more illegitimate than they used to be. You've got 0 day to expiry options coming in, people doing wild stuff with that. You got meme stocks popping off everywhere. You got companies being priced completely outside of their earnings metrics, right? And anytime there is some kind of stumble, the Fed comes in, pumps liquidity. There's no true price discovery anymore. So when you're going that even traditional so-called sensible real assets or whatever are getting a bit silly, the so-called silly internet money asset, which does have logic behind it as well, I guess starts to appear less silly. And so you might as well sort of put a bit here, put a bit there, and kind of cover all bases. I think that's just where it is. It's become the new way of diversifying, especially after the traditional 60-40 portfolio with bonds has been pretty terrible for some time now. Obviously, that was due to the post GFC stuff, which messed up rates, and then we had inflation, and now they're off to the right.
And then zero rates, and oh god.
Yeah. So I think people are just looking for the new secret sauce for the next decade that is actually going to generate some kind of alpha. And Bitcoin's now been around for long enough. You've got all the, the BlackRocks, all the ETFs, all that kind of stuff.
Yeah.
Legitimate companies buying this stuff up in size and volume. So I think that backing has really taken stuff there. And also just the market cap. A lot of people were blocked as far as a company treasury or like a managed fund or a pension fund, because the total asset base wasn't over $1 trillion. A lot of them wanted to buy way early, but they can't per their mandate, right? But now it's big enough that they can do that.
Yeah, absolutely. As you say, that diversification of portfolios, right, is people that are in the know, financial advisors, people who have stock options and all these other things. These people, they know you don't stick all your eggs in one basket, right? It's no longer the kind of the degenerate asset that is like, right, just everyone get in on Bitcoin and just pump it. That's no longer the mantra, let's say, and the serious investors are now taking note, and they're coming in, and as you say, giving it more legitimacy, giving it more value in the eyes of the market in general, right?
I think you get sick of looking at 60% plus year-on-year gains year after year, right? And then you're sitting on these other stocks here, which have gotten you your 7% or 14%, and you're just like, what am I doing?
Exactly. It's like, all right, well, you know what? We can't beat them. Let's join them. I think that's kind of the sentiment generally. So yeah. I've seen a few comments in the chat with regards to CAD. Gold. I mean, we always know everyone wants gold, but Kieran's asking, is it good long for USD CAD? We've been talking about, obviously.
This is a chart where we got. Oh, we can't see him. He's all squished up now.
This is your hangman.
That was the Bart Simpson, the eat my shorts.
LJ and his artistic attempts of chart diagrams.
There we go. There he is.
Yeah, I mean, USD CAD it's not really done very much in the grand scheme of things. It's really kind of been kept within the range. Only recently did it break out to new highs again. What do you think? I mean, are we starting to see that support now forming in the dollar to then see that push back up again against the CAD? Because I mean, the CAD, let's not forget, the Canadians haven't managed to do a deal yet, and they are heavily reliant on the US for their economy. So the CAD is one of those vulnerable currencies, I suppose, is the best way to put it.
Yeah, they haven't got a full deal fleshed out. They keep going back and forth. I think we call this sort of bottom through here, saying we'll get a rise up to these levels, which we did, pushed on from there, basically a retest of that, and then powered on right through there. So we pretty much ran the bottom through there. Since then, obviously, we've ran up pretty far. We've had this slight, pullback, obviously, because of the NFP. Right now, we've got this relative level of support that we built off through here, and then the NFP came to a head just above that as well. From here where we are, also given the backdrop of what we were talking about, the dollar in general just before, I can see a bit of a retrace from here. I think it'll be questionable if we can make a double top. I think we'd an equal high, I should say, to that sort of relative swing high that we retraced to after the NFP. I think we'd fail just below there and then possibly come off again. because after this bit of relief in the dollar, I would probably lean on the side at the moment that the dollar starts selling off again.
Really?
Obviously, we'll have to see how the price action stabilizes itself through there. If there's any other comments that come out from Fed speakers over the next couple of days, Trump, that kind of thing. But I would expect that retracement in the dollar and then to see us come off. So if you're taking like a little pick like that on dollar CAD at the moment, intraday today, maybe tomorrow, then I can see the upside. But overall, I would be very cautious. Just like Mike was saying with the tariff deals and everything, we haven't got that sorted out 100% as far as Canada is concerned. And looking at this, I mean, I don't particularly like this on a 4-hour.
I'll tell you what looks... Sorry, go on.
I was just going to say, you can see we've got some sort of relative support here, but that massive candle off there. And the problem part is the Canada part with the trade deals, because that's going to set them, moving outside of the other majors a bit as that keeps getting, slapped around. So I can see that retracement up here, like we were talking about, but then from there, you'd have to be really cautious to see it actually continue to build off that.
Yeah.
I don't think we're going lower from here for the time being. I think we've got the upside.
I was just going to say, looking at gold has broken the highs that it was making earlier on, and I actually think it might push higher. We could keep going up to kind of the 373 level. We're just not finding any strong enough resistance to stop it.
I think we're still capped here from what I'm seeing. We haven't quite gotten to the high yet.
Just looking at it, at the structure that we've got, just looks as though it might keep going. Just looking at the structure that's forming on things like the 11-minute and stuff like that, it just looks still very much long, if I'm honest. And there are certainly levels at kind of the 371 area and others for it to target. So
Ulysses doesn't like the music, by the way. Ulysses doesn't like the music, by the way.
Old Nintendo games and elevator music.
Old Nintendo games are good.
I don't know what's wrong with
elevator music. Probably not so much.
Go if you want to know elevator music, go watch Scottish men in an elevator. That'll make you laugh.
Oh yeah,
that'll distract you.
Yeah, that's right.
So yeah.
Yeah, as far as what we were saying with gold, that is my preferred lean still. But as far as like if I could pick something else to trade, because we're seeing other things with the same kind of structure, I think that euro pound trade, I mean that's running on now quite nicely.
Yeah.
I think that's definitely the sort of way to go. I think it's much clearer direction. Because the other side of it, how we're moving, we have to now start asking, does gold start getting picked up again? I think we were talking about this earlier in ABL. If there is more concern or more risk as far as downside, say for indices, and you get that risk off element coming back into the market. Gold's been great all year, still looking pretty alright. If indices start looking a bit poor, gold, great.
Yeah. I just looking at gold, I just feel as though there's just a little bit more height in it. Just looking at how the previous 15-minute closed. If you look at the kind of the long wick on the bottom of it, it does look like there might be some more bullish momentum coming in onto it. So we will see. Fabian loves the music. Glad to hear it, Fabian. And Givrogos Karamelis. We're giving away insights and analysis and good vibes every day. Is the only reason you come for a giveaway? Then I'm afraid that means you're not going to be a very successful trader. So yeah. Thank you
I
very
think
much.
Jonatan did the giveaway last week, didn't he?
He did, to celebrate 80,000 followers. So keep pumping. Look, you want more giveaways? Keep pumping the subscribe button. Keep pumping the like button. You know, move that algorithm to get us in front of more people, and more giveaways will be on their way. That's how it works. Akram's asking if anybody's trading the Nikkei. I never in my life have touched the Nikkei. I believe I've looked at the chart once or twice, but I have never
Not these days. Hey.
Never been tempted to trade it.
I traded a bit through COVID.
Did you?
Yeah, and like post that, once we got inflation sort of coming through, the market finally came to life after 2 decades. But yeah, look, it's, the trouble is obviously the Japanese central bank owns still 70% or something of all stocks. One form or another. Same with the bond market. They've bought up everything. It's pretty much deaded the market altogether.
Yeah.
We had that massive pump. God, when was that? Last year or something? Now, back end of last year, I think, where we got like 30% up. Yeah, that was that huge run. And then that's when everyone was going like, "Oh, Japan's back." We came up from there and then just sideways for, like 2 years, right? And then we had this run and the massive collapse of the 30-odd%. That was last year. That's what I was thinking of. Yeah, I don't know. It's just a weird market. This is obviously on the daily. When you drill down to the shorter time frames, it sort of chops about. It's not very clear. It tends to take a bit of indication from the US markets, that kind of stuff. So I always find it, a much clearer picture to just trade where the largest amount of liquidity, amount of volume is, which is going to be the US markets anyway. So
gold did make that pump higher. I'm just waiting to see now if we form any kind of structure for reversal on the 1 minute. Currently just creating an inside bar. So I'd potentially be looking for sells, but it just depends on how it forms.
I think if we can't close that level on the hour, then we're valid for shorts.
We've got only a few minutes left on that, so
yeah. I think that's what we're trying to, play with right now.
And remember what, I always say, that 1 hour, the last 5 minutes of a 1 hour candle, anything can happen, especially on gold. Just the way it can bounce around and wick off in those 5 minutes is insane, how it can do it sometimes. So yeah, I'm just having a look.
Ulysses just said he watched the Scottish man in elevator, by the way.
You're welcome. 11. If you don't know what I'm talking about, guys, go and YouTube Scottish guys in an elevator, a voice activated only elevator. It is pure comedy gold. It's hilarious. So you can thank me later, like Elusis has just thanked me.
Raymond saying that gold spreads are too high. They're not very high at all. You got to realize like how many points back gold goes. So you're it's almost like being zoomed in too much. That's just how it is. Gold market. So spreads basically come smaller and smaller, tighter and tighter, depending on the total liquidity of the market, right? So currencies are massive. You're going to be trading, well over $1 trillion in euro a day, and somewhere around there. Like fluxes between 900 billion and say 1.4, 1.5 any given day. And the gold market in total, I think, is like 170 billion. And that includes like the futures market in that as well. So the actual spot CFD, gold commodity market, whatever, is like 120 odd billion, 110, something like that. Then the futures are another 70 or so. So it's roughly like 30, 60, right? 33, 66, something like that. So yeah, that I would say, especially if you're trading on the 5s, there's still quite small spreads. So if that's a big spread, you probably just need to adjust how far your stops are and how much take profit you're actually looking for.
Yeah.
So,
Ali, go back a little while, and we looked at Bitcoin earlier, so you'll find that there. And crypto holdings, you seem to be doing okay for yourself if you're holding crypto. So you give us a trade. You tell us. So yeah. And he is indeed, Fabian. He is indeed a full-time trader, 13 years, long in the tooth. So, born in 2944, you should be giving us the billions, seeing as you're rinsing the profits from the markets today.
Yeah, where's that philanthropy now? Come on.
Yeah, exactly. Exactly. We're waiting to see that generosity. Raj is asking us to have a look at USD CHF. Seeing as you asked so nicely, Raj, LJ will no doubt pull it up on his chart and we'll see what squiggles he has today.
Yeah. So I think this was from last week. I was looking for, payroll to be worse. We come down into this relative support area with the wick down here as well. Obviously, the payrolls came out significantly more worse after the revisions. So we blew right through those levels, came right off to this lower cluster of support through here. So since then, bit of a retrace, just like everything else at the minute today. I could see us coming up and testing that underside. The trouble with the dollar franc right now is because if we are getting back into more concern around global economy, the current position for the US and the jobs market and everything, the franc is obviously that risk off currency that you go and buy, right? Now, with that said as well, if you go out to a much larger time frame, Swiss franc has been appreciating for a very long time now, and it is certainly a bit overbought, right? We've just come right
if
down.
I think if you go to the monthly, it'll show you even more how overbought it is, because we're coming down to like ridiculous lows.
Yeah. I mean, look at that. Like it's just been on and on and on. And so basically the point to highlight with that is around these levels, like the Swiss National Bank very much does not like it. And they have massive current account balance. They're also very active in the markets. They're some of the biggest holders of various stocks like Facebook and stuff, beyond anyone through their sort of sovereign wealth fund type thing, right? So when they've verbally announced that they are willing to intervene in markets if this continues, because obviously at a certain point this massively destabilizes the Swiss franc and then the Swiss economy. You also had the tariffs of 39% odd put onto the Swiss last week, which sort of came out of nowhere, and it's about 50% of their economy is like exports. So all these kind of things do really heavily impact the Swiss. So with that said, I take little stabs out of the market strategically on the dollar franc. It's, you got to be careful, because when the Swiss National Bank finally does decide when to come in with the market operations, the currency can just move 200-300 points in one go. And often they punch it, so there won't be fill orders the whole way up. You'll just gap really hard. So you can clear out your whole account just on, the one or two trades, right?
Oh, the number of people who got liquidated when they stepped in against the euro. Do you remember? It was just, it was bonkers.
Entire firms that have been around for well over a decade, lose 350 mil in an hour, and it's just gone. So,
that gold move looks like it's continuing, I would say, because the 1 hour, unless we suddenly wick off in 5 seconds, gold is going to keep going higher, I think. And I could see us going up to 3,376, because that 1 hour candle.
Yeah, we are holding up through here
very, very strongly. The 2 hour as well. So I'd say we're possibly going to be going higher up to probably see a bit of a pullback now, just with the flip over from the hour time frame. But we're only halfway through the 4 hour, so there's still a bit of time to go. I'd want to see us. Ideally, I want to see us take the high before expecting any pullback, because that 1 hour candle just closed really, really strongly. So you'll see a bit of a pullback now before a continuation higher, I think.
Yeah.
So.
Yeah, my preferred will definitely be the euro shorts for now, and then possibly take a look at NAS. So if we've just lost momentum through here, then the options pricing back down here at that 22,730 or so level, I might consider looking for shorts through here now. Yeah, I think gold is. I mean, if you catch it, it will be a good trade, but I think it's a bit skeptical.
Yeah, exactly.
Like the euro trade running on nicely here.
Yeah.
Same with the pound, everything. So further.
That is it from us for today, guys. We will be back again tomorrow. So make sure you catch us over on the ABL stream as well. But coming up right after this is Jonatan once again, with more chaos and madness and violence and drilling cans and all sorts of weird and wonderful stuff. So we will be right.
Fabian, I can answer your question tomorrow then. If you throw it at me again tomorrow, I'll throw it to you there. All right. There you go.
Cool beans. Alrighty. Guys, we'll see you again tomorrow. Take it easy.
Cheers, guys. See ya.
Hello, everyone. It is I. It is I. Look at this trade that I took on gold. Look at this. You know what I what I love about you popping on here is that you're not even in the live. You're on in the editing part of the studio. Maybe that's there we go.
Alex, there we go. Not me even knowing what I'm doing. Oh dear.
Where's my screen? Where's my screen? There it is. I thought that was super fun though. I thought that was super fun. I loved every second of it. Then you're a boring person.
As the youngsters would say, that was so cringe, I think is what they would say, if I'm not mistaken. But yeah, anyway, lovely to see you, Jonatan. See you later. Bye.
Nice to see you as well. Okay, so what happened here was this is just amazing. I talked I talked about gold, how it's like, oh, I'm bullish to the upside. Obviously, you're bullish to the upside, but like I thought, okay, upside potential on gold. I think gold is going to go higher. So what do I do live? Well, I short gold. So I short gold. Yeah, that's right. And Michael is finally learning that we can also have fun. We can also have fun in the live stream. It doesn't always have to be, ABO. It's going to be strictly educational. We don't have to do that. We can have fun as well, Anyway, so, I went short. So I went against my overall idea, right? I went against my overall idea. I said, okay, so I want a long gold here. I think there's more upside potential than downside potential, right? And so I went in the short. So I went against my idea and I shorted this. And then I closed this trade right here. And what does it do? It goes straight down to TP. So the short idea would have worked out if I stayed in the idea, if I stayed in the trend. And it bounced here, and my original idea of, watching this as a reclaim of support and range EQ for a move higher, that is now also playing out, but I didn't even enter that one, right? So I lost money on an idea that would have worked, and I didn't take the other idea that would have worked. And this is just story of my life when it comes to trading gold. When it comes to trading gold, I forgot to add gold after that. Maybe a Freudian slip there. Guys, what are we trading today? Let me know in the comments what you guys are watching today, and let me know if there's anything specific you want me to take a look at here. I'm normally joined by Deanna in this session, but Deanna is currently in a meeting. She will come on and join me a little bit later, and also soon I'm gonna do that giveaway. We're gonna be giving away five accounts from last week's giveaway, where the giveaway tool that we're using got stuck at 50%, and we only managed to give away 5 accounts, and we got 5 accounts left to give. USD/JPY, yeah, let's take a look at USD/JPY. Earlier in the session, during the European session, oh yeah, this was the trade on USD/JPY. And for some reason on my personal account, it did not hit that TP. I think I had TP a little bit lower, but I managed to write Henry 6 accounts because I made a challenge against myself, and yeah, that added another account to that. So USD/JPY right here hit that TP. I closed the trade, I believe, somewhere around here because it didn't manage to hit that TP on the personal account. Now, what I really like about USD/JPY here is the fact that it looks like it's inside the long reload zone right here. So it looks like it's inside the reload zone right now. Great. So I don't know about you guys. Would you be interested in going long on something like this, or short? Are you bullish? Are you bearish on USD/JPY? Let me know in the comments. Let me know what you guys think about this one right here. Would you be buying? And then if you would be buying, if you want to buy USD/JPY, like what are you looking for this? Just a quick, gonna do a quick overview of this, and then we're gonna go into looking at gold as well, of course. Everyone to look at gold, which I completely understand. Because gold is so fun to trade, isn't it? Very fun. It takes out those stop losses and then just rallies straight to TP. Gold. The gold way of doing things. Prince says USD/JPY shorts. Okay, so you're looking for USD/JPY shorts. All JPY sell. Okay, so you're bearish on JPY pairs. Yeah, I can see that. I can definitely see that. However, let's go out to the weekly here. Let's go to this one right here. You guys remember the idea from we had this idea from around April, May this year, and how we talked about this being support and a possible move up to the range EQ. Now that move happened yesterday, not yesterday, on Friday. So that move happened on Friday, maybe it was Thursday, I can't remember, but that move happened last week, end of last week. That move up to the range EQ did happen, and yes, I do see a potential, possibility of getting a move higher up into range high long term. Also got that trend line right here, could run into some resistance on that trend line, but the overall, the most important move has already happened on USD/JPY, and I feel like I'm gonna be buying in this area for continuation of this trend right here. I mean, I remember we started buying down here, right? And then we added to the position here And now I'm thinking, and it hit TP up here. Now I'm thinking, are we going to open up another position here? Or is it too late? And I have a feeling that the move has already happened. Maybe it's a little bit too late here. Maybe we'll have to look at another opportunity. Let me get my share here. Let me sit down for this. Sit down for this important segment. Nice. And I love sitting down after a full day of just standing up. Right, Princess USD JPY will go for 147,100. All right, so we're talking very low time frame here. We're talking about intraday 17100. Yeah, I mean, very possible. You're looking for a move down here, basically. You're looking for the move down to this level. Yeah, that's definitely possible. Then if we're looking for an entry here, maybe a hit of that level. That would make sense. That would definitely make sense for a possible trade on JPY. Right now we're hitting this support. This support fails, then the next level below is around 147,100, just like you said. I'm not gonna be taking that trade. I feel like it's not really what I want to be trading. Okay, so we got a nice breakout trade here on gold. Bit surprised that didn't catch that move on the EA. I think I have to do some extra job on the EA, because it's not executing the moves on gold that I think it should be executing. But it doesn't really matter. It's still profitable. And I actually did some analysis on my portfolio, EA portfolio. So currently I'm running how many strategies am I running there? 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so I'm running 9 different strategies. And it's starting to show some promising results here. I'm looking at the Sharpe ratio of 1.8, which is good. I like that. 1.8, very good. Profit factor of 1.4. Return to drawdown ratio is at 10, obviously very good. Got a winning rate is so the win rate is 49.9%. Get a drawdown of 7.5%. So drawdown is good. It's good, but I need to work with risk management a little bit, because I want to move that drawdown down to 5. So I'm sure that I'm not gonna hit any lose any accounts with running that portfolio. But that doesn't matter. You guys don't care about that. You care about gold, and I also care about gold. So that's what we're going to be looking at here today. We're going to be looking at gold. Right, so moving on to gold here. I like this breakout right here. We're going on the 5 minute. Are we buying this? Are we buying this, or are we waiting for gold to come down to this level down here? Are we waiting for gold to perhaps come down to that level? What do you guys think? You know what? Let's just pull up MetaTrader here directly, and we'll see if we can get in on this move on gold. So this is USD CAD. Okay, so this is the high time frame trade that I'm in on USD CAD. Let's move to gold. Get gold here on the 1 minute. I like how it's testing a good level right here. Is it a break and retest? I don't know if it could be a retest of that level, and we're now using that level as support, or it's a break of structure. We could be perhaps coming up and testing that level as resistance, and that would be a break of structure. And this local up move might come down and test the breakout move, which is very visible here on the hourly, which is going to be this level right here, like that. That's a good level for a potential retest, and I'm thinking if we're going to test this general area up here as resistance, that might be the break of structure. So the question is then, are we? What do you guys think? Shorting gold to the level below right here, or going long on gold for continuation to the upside? What do you think? What do you think? Long or short on gold? Let me open up a poll on that. Okay, you know what? Let me, I'm gonna give you guys, how much am I gonna give you? I'm gonna give you 1 minute, okay? We got 1 minute. Whatever the poll says, I'm gonna do. If it says long, I'm gonna go long. If it says short, I'm gonna go short, unless it's too late. We got 62% saying long. 57% says long, 55% says long. Okay, you know what? I'm gonna go short. No, I'm not gonna go short. I'm gonna go short. I really like this as a short. I'm gonna go short. Let's go. We're short on gold. That's a good action right there on that level. We reclaim this level. I'm gonna close that one. I'm gonna go. Okay, we've got 1 second left. That's it. That's it. 57% says short. We're gonna go short. We are already short. That's it. All right, let's go. Let's go. Let's see if we can make some money on this. Now, what I'm thinking is gold is gonna come down and test the breakout level. Gold is going to come down. It's going to test that breakout level. We're currently seeing a rejection right here of that level right here. Just like we said in the beginning, if we get a rejection at around this level, I think the path of least resistance now is to the downside. The support that we're currently testing is this level right here. We're currently holding this support as support. A break to the downside might initiate that move, well, to the downside. Louis says, I took that short at 3,368.82. That is a good entry. That's kind of like the highs of that rejection. So that's a really good trade right there. I like that. So when it hits that TP at the bottom, I think that's the time to start looking at longs, right? Flip the position. We are short, hit the TP. We are then potentially long. Guys, if you want me to take a look at anything specific, let me know in the comments. And while you are in the comments, make sure that you hit that like as well. When we hit 200 likes, I will initiate that giveaway. So make sure they go in and hit that like. At 200 likes, I will initiate that giveaway that we started last week. That's it. We're breaking down. Breaking down. Let's go. Good. Okay, we got Abdullah saying USD CHF. We got Kieran saying USD CAD. Just gonna take a look at those as well. How about on the 15-minute? Is it still short? Sailor says, how about the 15-minute? Is it still short on the 15-minute? Yes, I believe it's still short on the 15-minute. I like that bearish engulfing candle outside bar. On the 15-minute, I look at this and I see an end to the local move, and I think we're going to come down and hit the breakout level. Now, this is dangerous because I'm basically trading against momentum, and you guys know about gold. You know, when it picks up, it starts moving. So I'm getting some news coming out here. We got I think it's the White House Secretary Advisor saying that we must modernize the labor data to be transparent. So the labor data, the US job market, is one of the most viewed metrics in the economy, like the macro economy. It's like one of the best measures of growth in the economy. It's one of the most important releases numbers, and the focus that we're seeing right now on the job numbers and the fact that Trump fired the person responsible for reporting the numbers. It's going to be interesting. It's going to be interesting to see if they're going to make any changes, and then what type of changes are there going to be. Is it going to take away the importance of those numbers or the importance of that news event as a news event? It's going to be very interesting to see what they have in mind for that. But I do agree that it should be as transparent as possible, especially with the big revisions that we saw. Was it earlier this year or end of last week? I can't remember. We had a month, maybe that was the beginning of the summer or something, but we had 1 month where the revisions of the numbers was just insanely high, right? I think you all remember that. And it was quite crazy. And there should be transparency in what happened there. Okay, so we are short on gold. Am I going to do the same thing I did last time? I saw this exact pattern right here. I closed the trade in a small loss and then hit TP. Am I going to make the same mistake again? No, I'm not going to make the same mistake again. Will I make a mistake? Probably. But is it going to be the same? No. Be a completely new mistake. Taylor says, yes, there is a 1 hour order block at that level. Price is currently traded at on the 50 minutes. So it taken the liquidity also. So I agree, should be short. Order block. Order block. Where's the order block? Can you show me? Well, you can't show me because you're not here. But where's the order block? Let me know where I can find that. I will take a look. All right, so everyone joining here, make sure that you hit that like. At 200 likes, I will initiate the giveaway. I'm going to give away 5 evaluation accounts here today, so to celebrate the fact that we hit 80k subscribers last week. Steeren says, can I enter the gold trade now? You can do whatever you want, man, but like I feel like you should not follow me. Okay, you should not take the trades that I'm taking. You have no idea what this trade is based on, right? You have your own. Yes, Henry, 6 accounts, man. You're like my fiance. I know. 6 accounts. I keep on saying 5, but then Henry comes in and says like, no, it's 6. I know, man. I know it's 6. Everyone, it's 6. If you want to know how many accounts we're gonna give away, ask Henry. Henry knows everything. He's always right. That's right, Fabian. Hit the like button. Let's go. Hit it. All right. Let's see. Get some. Let's go. Oh, come on, breakdown. Laptop Service Center is trying to get an account. Why do you have that name with that profile picture? It makes no sense. Laptop Service Center sounds like you have a company and then you have that profile picture. It doesn't make sense to me. And then I feel like I have zero energy. Like zero energy. I feel like I'm close to, like, if this one does not make me money today, then I will, I don't know what I'm gonna do. Cello says the 1 hour bearish OB is on the hour time frame if you put the Lux algo indicator. What? Well, now I have to. Lux. Okay, so I searched for Lux algo and I found like 100,000 millions different indicators. No. Yeah. This is why I hate gold. Right, do we have, what news do we have today? Take a look. The 4th of August today. Didn't know. We have factory orders month to month at 1600 day. I think that could potentially be of importance because factory orders, I mean, I think in current conditions, I mean, you look at the Forex Factory, it's a yellow folder news event. So basically, very, like, doesn't matter, right? But I think given the circumstances and given the conditions we are in right now, I think that that might actually be important because it does give a broad indication of economic conditions in the, I think, the domestic manufacturing industries, which to me sounds a lot like, you know, looking at what effect does the tariffs have, you know, currently. I think it might be interesting to watch that one at 4, and also of course see if there's any interesting movements in the market based on that. Celo says that if it breaks through the 1 hour bearish order block, then we could potentially go long. All right. All right. I'm gonna go in and I'm gonna see if I can find that find the giveaway. I think the giveaway is I think the giveaway for last week is already closed, but we're gonna do the draw. So make sure that you hit that like. We are getting closer and closer to that 200 likes. So everyone watching right now, everyone who watches this hits that like, then we are getting one step closer to that giveaway. So make sure that you do hit that little like that we have. Is this where when it's gonna reverse? You guys think, is this when it's gonna reverse? Is this the bottom? Is this the long-term bottom? Is this the bottom for the year? Nah, there we go. But come on, close it. One closed. There we go. That's the TP right there on gold. Are we gonna go long now? Are we gonna go long? What do you think? Let me open a poll. Let me open a poll. Are you long or short on gold? Let's go into the comment section. Hit that poll in the comment section. Let's see. Are we gonna go long or short? Well, obviously we're gonna go long. The question is, where are we gonna place our where are we gonna place our stop loss? This is a perfect break and retest right here. I'll really like that break and retest right there. Are we going to enter position long here on gold? Stop at 3.3. Stop at 3.351. 3.351. Yep, that's perfect. Okay, so we're gonna go long right here. Go. Why not? Oh, because okay, it's instant. Okay, there we go. We got a long position right here on gold. Start building a position here. We got 30 likes left for the giveaway, so make sure you go in and hit that like. A-Cash says long for sure. Yep, I think so too. Where do I think the bottom will be on this local move? I think the bottom is going to be exactly on 335979. Prepare to enter another position. I would love to see a little bit of a bigger move to the downside here before we start building bigger position here. Yeah, I would say that momentum is definitely bearish here. Local momentum, obviously we're getting a push to the downside, but that does not mean it's going to go down forever. Go down to the 1 minute. Initial reaction on the 1 minute could just be a local pause before moving lower, but let's see if we get it back above that level. Okay, I'm adding to the position right here. That's a good reaction to that level, exactly like we want to see. I do expect price to start moving higher from here. Let's see what we can get. Looking good, looking very good. Got that stop loss right there. Where should we take profit on this one? Where would you guys place your stop loss for this? Look how perfectly it hit that trend line, by the way. The Swiss government says that we're not considering any countermeasures against the US at this point. So it seems like the Swiss government are ready to continue the talks with the US beyond August the 7th. They're determined to make a more attractive offer to the US. And yeah, so they plan to continue their talks to the US and do not consider that they are not considering any countermeasures against the US. So obviously they're trying to get a better deal with the US. I think it's the right thing to do here. Right. Okay. So we're gonna limit the stop loss right here. Are we? 15-minute. Let's wait. Let's wait for the 50-minute candle to close. It's gonna close in. It's gonna go close in 10 minutes. Maybe that's gonna be a little bit too much. What about the 5-minute? Okay, the 5-minute just closed. It closed like a. Oh man, look at that, beautiful, absolutely beautiful. Gonna keep this trade open like this. Yeah, I think we're gonna have. I mean, I look at this and I see, of course, you know, this general area down here. I think that's it's also likelihood to see that level being hit. Now we have a low time frame. Okay, so what I'm going to do now is going to increase the position size on this one, and I will then limit the stop losses on all positions. So very tight stops on this on these trades. Did you guys see that? Okay, I'm not gonna say anything, but did you guys see that? I'm not gonna say anything, but that was hilarious. Let me know what let me know if you saw that. If you didn't see that, that's great. I'm not gonna comment on it. But if you saw what just happened there, that was hilarious. Okay, so these are the two positions we have right here. I like that it's hitting that level, keeping that support. I like what I'm seeing right here. Digital Factory says, Jonatan, please add music. Okay. You want what song do you want? I can sing. Do you want I can perhaps dance? I'm not a good dancer, but tell me a song. I might help you out with that. Do I hear anything? Yeah. Here we go. Lonely by Akon. Yeah, I can do that. Yes. Yeah. Do like a stop loss remix. All right, so I think we're creating a local bottom. Local bottom. We're creating local bottom here in gold. Come on, let's move higher. I mean, I know you want to. I've give you permission. Give you permission to move higher. %61 says long gold. I would agree. I'm also long gold. I like how we got a lot of Swedish people in the chat. We got at least 2 people. Like that. Nice. Welcome. Bolton says, can you tell me why is gold so popular instrument in the 5ers traders and real? I don't know. I really don't know. I think maybe because people like gold. I don't know. Like, I honestly can't. I don't really understand. I mean, I guess there's like some psychological factor with the fact of like gold being interesting in a sense to trade. I do feel like we're staying a little bit too long down here. Or not. Okay, looks good. Okay, so now I wanna. We had a comment here, and I think that comment was actually pretty good. Now where was it? Where was it about the? Okay, so why is your take profit so low? I think if gold managed to go higher, we'll create new high of today. Yeah. Okay, so I'm actually with you with that. I think when I'm trading like this, obviously I want to look at the lower time frames. I want to look at like intraday moves and I think the TP here is good because the TP is at the high of the local move. We got the local high right here. That's the local.
I don't know how to.
I'm adding you as well. Okay. Hi, Deanna. Welcome.
Good morning. I'm so sorry.
No problem.
Steal the spotlight.
No problem at all.
About that? Oh my gosh. Okay, I gotta slow down. I'll let you do it.
No problem at all. That was fun. That was great. There we go.
How are you, Jonatan? Good to see you.
I'm good.
It's been a bit.
How are you?
Good. You can take my screen off. I did.
I'm just gonna. Okay, I'm gonna go back. I'm gonna go back to my screen here and look. I'm in a long here on gold. And looking at it, I think we see a typical break and retest. Low time frame support right here. It's the first. I wouldn't really say first retest. I guess it's sort of the first retest of this area. So it's a rounded retest. Got that first retest of untested high right there, and now we're seeing some nice price action coming in here. Is it? I don't want to increase my position size here, but I think, you know, when I start feeling that I want to start increasing the position size, that's usually when I end up losing money on an overall otherwise good trade. Deanna, how are you? Welcome.
I'm doing well. I'm doing well. Did you have a good weekend?
Yes, I did actually. I went away with my fiance. First time being away from the kids.
Nice.
In a long time. So we've been away like just overnight, like probably I think that was last year, but now we went away over the weekend, and that's the first time in like 7 years.
Wow.
So, you know, I was sitting there and I'm like, what do I do now? You know, like we rented
without the kids.
Yeah, we rented a nice Airbnb on the west coast of Sweden. Like, it's a beautiful place.
Ooh.
But I was just sitting there and just quiet, and I felt like okay, so what am I supposed to do now? Just sit here? Just sit here and but it was nice, just no, you know, it's quiet, no kids running around, no stress, just being able to really just sit there and do nothing. You know, I had so many plans, so many things I wanted to do, and I ended up just doing nothing, you know, just sitting there, just listening to the sound of nothing, not doing anything.
You forget how much you miss that when you're a parent, or you don't even know that you, right?
Yeah,
That you had
exactly.
that.
And you know, and I remember like everything I did was like, you know, I remember, you know, I was out on the walk and I saw this excavator, and my son loves excavators. So I'm like, he should have been here. He should have seen that, you know.
That's sweet.
Yeah.
Oh,
How was your weekend?
It was good. It was good. I can't even remember really what we did, but it just flew by. My kids go back to school on Tuesday, so we've been busy with like, you know, getting ready to get back to it, and yeah, it was great. It's a good weekend.
Right. Yes. Back to school. That's
It's wild.
yes. As a parent, it's like your life is just changing drastically. They get out of school and then they start school again. It's like back to the old routines, you know?
Yeah. Well, and I have one that is starting high school for the first time. So she's so excited.
Wow.
It's kind of a big deal. So it's a fun time. And they're all excited. We had a great summer. We did a lot of traveling, had a lot of fun. They're ready to get back to it, I think. So it's good.
That is great. Summer is feels like the older you get, summer gets just shorter and shorter.
Life, right?
Yeah,
it just
life.
Flies by. I agree.
It is just flies by, yeah. Okay, so we got gold here about to perhaps start hitting those TPs. You know what? Looking at the spreads here, I'm just going to move my TP down just slightly to make sure that I'm not going to get left behind here based on the spreads. So nice trade back to break even on the account. If you know, if it hits TP, you never know. I'm not going to close this trade early though, because I do feel like it's a good area. I actually think gold on this move, if we go back, we'll look at the break and retest, I think gold has potential of moving even higher, but I feel like I don't want to be taking the risk of staying in this trade for too long. Fabian says the parents are happier than the kids when school starts. I don't know, but there's definitely some truth to that. I mean, you go back to the normal routines and habits.
I like having my kids home, but they do get kind of sick of like I mean, they have responsibility, but you know, like they need that structure and that rhythm, and so it's easier to trade when they're not here, even though it's fun when they're here. But we all thrive on rhythm and structure, you know.
Exactly, and I feel like when I'm at home with the kids and I'm working and the kids are at home, I feel like the best thing to do is just, you know, like create a plan for the day. You get that structure set up. Otherwise, it's just going to be very. Oh wow, look at that! It's one position. Okay, I'm just going to close it here.
Now, here's a good, I like this from Henry. Time in life is like a roll of toilet paper. The closer you get to the end, the faster it goes. That is so true.
It is. That's actually very good.
True.
Very good quote.
Do you trade in partials, or do you always get out all at once? How do you typically exit a position?
So I enter my positions. I scale into positions, but I usually exit positions fully. So
okay.
I try to I try to build the position based on the level of confidence, or the level of confirmation. So the more level of confirmation, which when you think about it, I should do is just focus on entering fully when I have full confirmation. That's something I've looked into it, and I think one of the reasons why I'm scaling into entries is because a lot of times you'll hit a good level, you don't have confirmation, but you know it's a good level, and then you wait for confirmation, and then it's too late. The trade is already gone. But when it comes to exit, I think it might be a mix of being a little bit impatient, but also I feel like a trade, I don't know, but for me at least, I feel like a trade stays in the entry point longer than at the exit point a lot of times. Which of course, like doesn't really make a lot of sense because the market doesn't know if you're in the position or not. It doesn't care about that. But for me, at least, I feel like so you have patterns like this where you hit a good support and it will consolidate within this area. But a lot of times I see that at the level where I want to take profit, it doesn't stay for as long. I might be wrong. Maybe it's just maybe I just think it's like that because I want to exit the trade earlier. But yeah,
I think it just comes down to style and preference, really. I mean, there's no right or wrong way to do it. If that's even just you enjoy getting out of the position and being done with it and moving on, I think that's fine too. That's a good enough reason.
I could probably. I should probably keep a position open. I think there's a lot of things we do in trading that we know we can do better. And I think one of those things for me is leaving a runner, like Alexander says here. He will have left a runner, and I think considering we go out to the higher time frames on gold, we're in this range, and it's trading MetaTrader here, so I can't really. If this level, I think we're in the middle of the range. I think this is range EQ. Now, if this level has just been reclaimed as support, we don't know that yet, but it could be resistance, it could be support. It could be the fact that, well, price could be using it as resistance or support. If it's been used as support, then we have potentially like a big move on gold, maybe all the way up here, and that would be a really big winner. But then there's the timing aspect of it, that there's a risk. The longer you hold the position, the riskier it becomes. Depends on if I'm taking a swing trade or an intraday trade. Now this is obviously an intraday trade. Look at GBP CAD. This is a long-term trade where I'm expecting this could take a couple of weeks to play out, and that's going to be different, obviously.
Looks good. Yeah, I think everybody. There's some comments in the comment section. Some people agree with you and some people don't, and I just think it just shows there are many ways to do it.
Yeah. I we have one comment saying it means that I'm scared of losing. I think for me it's I think I'm past being scared in trading. I feel like I'm last time I was scared and was trading, where I felt like fear of losing or just fear in trading, is probably back when I was using maybe way too big of a position size on live accounts. But now I know that I'm able to have a long losing streak without anything happening, and that kind of takes away some.
I think it's dependent on the person, right? Because you could say that if you leave a runner, you're scared of missing out, and that's why you're doing it. So I think it's dependent on the person and what they're, how they conceptualize what they're doing, and I don't think there's a definitive right or wrong way to do it.
Definitely.
I do both. So a lot of times I call it fill or kill. Like it's either going to hit my stop or it's going to hit my target. But then a lot of times I'll also do partials as well, because I kind of enjoy that process of like letting a trade work out sometimes. But it just depends on what your goals are and, how far you think it's going to run and how much stress it gives you when it's open. If it stresses you out when it's open, maybe you just feel better if you close the trade. Just depends.
Yeah, like when I'm trading like this, when I'm trading intraday, I am very stressed. That's the thing. That's one of the reasons why I'm not doing it. I'm doing it for fun, actually, on these live streams, and viewers know that I'm a swing trader, so that's the trading I do normally. But I do like I like intraday trading when it works. When it works, it's the best thing. But when it doesn't work, I get affected. Like I do get affected more than I should.
But we all have like our personality, and that's just fine, you know. Victor and I talk about that all the time. Things that stress him out don't bother me in the least, and things that I would be totally frazzled over, he is cool, calm, and collected. And I think that's just a function of our personality. And truly, like when people say you have to take a trading system and make it your own, that is an aspect of how you make it your own. You adapt it to who you are, what makes you feel comfortable, and what allows you to trade the best. So if that means taking the whole position off, then I think that's what you should do.
Yeah.
Oh, I love Lewis's comment. Nothing wrong with fear. We just have to learn to control it. And I would mostly agree with that. I think you know, fear is a biological response, so that happens automatically. It's a physiological response, but the thoughts that we attribute to the situation is what causes fear. So, like for example, a stop out. If you're afraid of that, that might mean that your thinking is telling you like, "Oh, I'm a failure if I lose this trade, or I'm going to lose the account, or this shows that I don't know what I'm doing," that kind of thing. If your stop out is thought of as like an insurance policy, that same exact event isn't going to cause fear. So really the thinking is what matters, and how you attribute the thoughts to whatever you're doing. So that's a great point. So
Yeah.
Rod, go ahead.
I'm gonna just we have when Victor comes on, I'm gonna jump off, and I have a traders interview. So I got this guy I'm gonna interview. He's made quite a lot of money with the 5ers. It's gonna be a very interesting interview with him. So I'm gonna do that shortly. But before I do that, I'm gonna do a quick giveaway of the accounts that I did not manage to give away last week when the software that we're using stopped at 50%. So what we're gonna do now, 6 accounts. Let me just clarify exactly if these are high stakes or boot camp accounts. Let me see. Yeah, okay, so we did 5 high stakes account last week. So what we're gonna do now is 6 20k bootcamp accounts. So this is for the giveaway that we did last week to celebrate the 80k subscribers on the channel. So everyone who's in that one is now eligible to win accounts. I'm gonna click draw winners here, and hopefully it's gonna work this time. So let's all
Fingers crossed.
Fingers crossed, exactly. That's what I was looking for. Okay, let's go. Not get stuck at 50. Oh my god, it gets stuck at 50 again. Oh, yep, okay, nice.
Is it still going? No, it's not going.
I don't think it is.
No.
Okay, so what I'm gonna do is I'm just gonna I'm gonna share your screen, Deanna, and I'm gonna try to fix this. Let's see what you're looking at here today, Deanna.
All right. I'm not sure why it's coming through so tiny. There we go. Now we've got it fixed. All right. So this is what I'm looking at in the S&P. So looking at the daily chart to start out with, we had such an ugly week last week. Get this out of the way here. Such an ugly week. So this is Friday, Thursday, 5 down days. We haven't seen something like that in the S&P for a very long time. You know, the S&P seemed like the rocket ship that was never going to come back to Earth, even though we did have like a little pullback in this area. This was a pretty nasty one. And we've been talking about this kind of triangle area. That's where, for now, price has found support. You can see there's this area here where we have kind of a triple bottom, and price just absolutely plummeted down there, fell through this triangle area that I have outlined, and back to, I guess the low was around 62.39 or so. So now we're getting kind of like a bounce from that level, and the question is, are we going to see further downside? That could make sense because of how aggressive the selling was. or will the rally continue? For right now, it just seems to be, all we can say so far is it's kind of a relief rally where we're seeing like a squeeze higher. But price has been kind of stuck at this level for a while now. So the the push higher started overnight during the Asian session, kind of consolidated for a little bit around, pre-London session, kind of continued. And then the past, 4 or 5 hours, price has just been stuck inside this range here. So we have the New York Open in about a half hour. So maybe we'll get some more answers at that point. But so far, price has just been a little bit slow and sluggish, maybe kind of waiting to see, what the large players are going to do. This week, we have very, very little news. So while last week was just chock full of news with NFP and FOMC, this week is quite quiet. Tuesday, so tomorrow we have ISM services PMI, and Thursday is unemployment claims. So it's a totally different week. Things could look, completely different by the end of the week. But right now, price is just kind of hanging out here, maybe waiting for the open. So that is what I'm looking for, to see price kind of pick up one way or the other. But so far, it's been a nice little relief rally, but the question is, will it continue, or is that it? And then we'll see further downside at some point.
All right, so I'm now done with the giveaway. So finally the wheel has, and then we got 6 winners right here. So if you're on the screen here, that means you've won 6 accounts today.
Nice.
So congratulations to everyone on the screen here. You've just won a 20K bootcamp account. And for those who are asking how we're doing this, we're using a software called Gleam, and it's picking people from the giveaway at random, but also based on the entries that they've done. Okay, so that's it. These are the winners that we have, and congratulations everyone. You are going to get an email to the account, or the email address that you used when you signed up to the giveaway. All right, guys, that's it for me today. I'm gonna jump off and leave you guys with Victor and Deanna. Take care, everyone.
Later, Jonatan.
Take care. I will see you all tomorrow. All right.
See you tomorrow, Jonatan. Hello, everyone. How are you doing? It's a beautiful day to be a trader. Isn't that right, Deanna?
That's right. Hi, Victor. How are you? Good to see you.
It's great seeing you too. Let me adjust my screen so my hat isn't as big as it is now looking. There we go.
Perfect.
We as guys don't tend to look too much to pay too much attention to aesthetics, but that's the old stereotype, right? We do look at our aesthetics. All right. So how have you been, Deanna? How is Dr. Cole, the magnificent, the fantastic Dr. Cole doing today?
You're always the best hype guy. Thank you, Victor. Monday, and I'm already all hyped up. You've got me ready for the week. I'm doing great. I'm enjoying the weekend. Was awesome, and at least where I live, it's very hot here in the summer, and we've had nothing but rain and cool weather for at least the last 2-3 days. So totally unexpected, total surprise, but it has been lovely. I feel like it's fall already, which is, pretty surprising. But what about you, Victor?
Maybe we're neighbors. Maybe secretly we're neighbors because you're describing my weather as well.
Really?
Yes.
Well,
I think
I'll look for you.
I think I saw you the other day walking around here.
Really? Okay. I mean, I either have 2 dogs or 3 kids. One of the 2. That's me.
Okay. I'm gonna check my memory, see what I saw. In the chat, who do we have in the chat? It is we have 55 minutes to the close of the stream, so we have plenty of time to spend together, have some fun, dig deep into the charts, or some other trading related topic. of your choice. Let's see, we have Louise. We have a couple of nice members who are saying hello to us. As always, the lovely Marina. And who else do we see in here? Theola, Stephen Chipeta. I like your last name, Stephen. I don't know if I pronounce it well, but it does not matter. It makes me feel great. So I think it's great. And Oliveira Vex.
That's a good one too.
Yes, I hope I pronounced that perfect, or not perfect, at least okay. So are you in any trades, Deanna?
I'm not. There's been a lot of question about, or a lot of talk about gold, and Jonatan had a long trade in gold. And so I came on when he was looking at gold. So I'm looking at the S&P as always, but it's a little bit tricky in the S&P. So here's what I'm looking at in gold. Still, it's pretty messy. We've been talking about this like cup with handle. Now it looks like kind of an extended handle, and then, kind of got weaker. Today is looking pretty strong though. So if you're looking at gold, when we first were talking with Jonatan about his trade, price was right around this level here. So it was kind of just under the previous day high, and now you can see it's really put some room in. So really strong looking move in gold at the moment, and I think a lot of traders are excited about that in the chat. For me, I am keeping an eye on gold, especially as the S&P is kind of tanking last week, but it's still a little bit messy, and I'm hoping for a little bit more clarity. But definitely today's action looks pretty good. And I'm seeing a couple a question about Raj is asking for a scalping strategy for gold. Whew, that's a tricky one. I would say, and Victor, maybe you can weigh in on this. Gold is a really can be a difficult one to trade unless you're familiar with it. So I don't know about handing out a scalping strategy safely. What do you think about that, Victor?
I think that's a great question. Thank you, Raj. Yes, I think we can absolutely give you a strategy for you to follow. It's not going to be as precise as do this or do that, but look for these things. And I'm going to switch to my chart, if that is okay with you. Let's see. We have, by the way, we have Reese also was asking about dollar weakness. We can discuss that in a little bit, because I certainly think that is relevant today. That question is absolutely relevant today. So let's switch, if with your permission, my lady, to my screen. Let's see, where is my
I think I can do it for you here.
Yeah, thank you for that. Very kind of you. Okay, so what are we looking for in gold, or in any pair actually? This strategy is a universal strategy. It's not as much as a strategy, but a concept, a further breaking down or further application of the same concept that I've been talking about, but one specifically, and that's the order block. Raj, and anyone interested in scalping, what you need when you're scalping is knowing when and where that is, and actually it's more where than when. What I mean by that is, where on the chart, at what level can you have a good chance in knowing how the market will react? Because as a scalp, you're only looking for one little movement, right? So you're not looking for the whole leg going up, going down with the trend against it. All of that becomes irrelevant. You're only looking for one little move, and that could be, a couple of pips in the case of gold. Or, it could be as little as $1. It could be $2 in the price of gold. So let's take a look. And one idea is that the order block, I'm not going to make this a complete course on how to scalp with order blocks, but in any time frame, you can find these areas where you can expect a certain reaction from the order block. I'm gonna perhaps go deeper to let's do it on maybe on the 5 minute. Let's see. We have let's look to the left. There isn't anything to the left. So what I'm going to do is I'm going to pick a structure. Let's see, maybe a half an hour. It doesn't matter really what time frame you use, but let's assume of course the order block isn't the cure-all pill, right? You have to use confluence, you have to use top-down analysis as much as possible or as relevant as possible, and also anything that could increase your risk, your probabilities to know where that reaction is likely to happen, right? And I'm gonna give you this, right? For example, we have here, and we see this all the time. Look at this. I'm just going through all the order blocks that were in here, right? Not making any distinctions if they're fresh, if they're old, if they're against the trend, they're with the trend. I'm not even looking at any other time frame. I'm just looking at one time frame, okay, to keep it simple. And of course, you can build, higher time frames, confluence to it to increase your chances. You can go only with the trend for better probabilities, better win rate, and all of that, right? And where to put your stop, I will tell you as well. Okay, so let's break down this area. I'm gonna do it as quick as possible. We're gonna be looking at all the order blocks defined as I do, when they're created, what happens when price comes back to them. That's one. We have another order block here. That one failed, right? We have another one here. Actually, let me mark them as a template, because maybe that could be something we could definitely use in the future. So this would be a win. And I'll explain in a little while why I think I mark this as a win. Let's save this as a win. And there we go. And we're gonna an L for a loss. Okay, so we're gonna, I didn't prepare this, so I'm gonna just check any structure, any piece, the last couple randomly, just now look at any at the price action, and just looking at one time frame, see if we can find something that makes sense to us. So let's see, we have a loss, which is an L. Let's save that as an L, and then we can do it very quickly. Where's the L? There we go. That's the L. Okay, so while I do this, so this would be a loss. I'll explain why. This would be a win. Right, now I have two. That's the win, and I'm only doing a few because of course we have, this would be a loss, and this would be a win, and so on. Okay, now what I'm explained here is just the concept of how I trade, how I scalp with using the order block, how you exactly use it, where you put your stop, how far you put your TP, if you have other rules like with the trend, against the trend, when you other filters, all of that is for you to find out, because obviously there's more to it than just this. Okay, but if we consider that an order block is, let's say this is an order block, for example, right? Here you have an order block, right? And if we define it the way I do, which is when you have an engulfing or an outside bar, you can be waiting for price to come back to that order block and have a reaction. In this case, you had this reaction right here, very beautiful reaction. Now, price came into it from the highest point it got before, got into it and reacted from it. What I mean by that, this is the order block, right? And you could be waiting for price to come back to those order blocks and have that reaction. It doesn't happen all the time, but it does happen very, very frequent enough for you to do something with it, meaning it has edge if you know how to approach it correctly. And if you apply the same thing as I just did, this would be a winner as well, right? That's why I have the W, right? That's the reaction that you're looking for. It went even further, but we're only looking for the initial reaction. This is a loss, of course. Price came back and went through it, right? So that would be a loss. So you have one loss, another winner here as price came back into it, move away. And then you have a loss here. So basically you have 50-50, two losses, two winners. And then you have another here, which I didn't paint yet or draw or mark, which is this. Look at this. Price comes back to that order block. It does have a reaction, and it does have some, it doesn't react right away, but it does have that reaction. See that? It moves away from that order block again, right? Remember, we're only looking for the next level, a little push, a little reaction. And in this simple, very simple, I could identify, right? So you have how many losers? 1, 2, and I'm gonna stop right here not to make it too long. We have 2 losers, and we have 1, 2, 3, and 4 winners. So it's basically 4 winners, 2 losers. How much is that? That's 2/6. That's going to be 32% loss, right? So meaning actually that's not bad at all. That's 68% win rate. Very quickly, of course, this is way too little numbers, sample size, but that's the general idea. And I'm not telling you where to put your stops, as I said, or your TP yet. This is just the general idea. If you know in advance when price gets there is going to react, that's perfect. That's exactly what you're looking for a scalp. And you can try things around with the trend, as I said, with higher time frame bias, with anything you want, with momentum. You be the guest by making this even better. But that's just a basic idea around how you can scalp using order blocks.
That's excellent. Hopefully that's helpful. I think that was a really good way to do it.
Actually, I do trade like this. And I have to, this is not my main strategy, and I don't have as much data as I have on my main strategy on this scalping strategy, but it's been giving me good results for some time now. I have more. Actually, I could check that how much I have, but I have a couple of thousands of trades already. So wow. It's pretty safe to say that I've got something here, but I still have to refine it somewhat.
And every trader should, right? We talked about this a little bit earlier. That is kind of the point of, you can have the basic framework for a strategy, but then you have to refine it so that it's personalized to you and how you trade, how you feel comfortable. We were talking with Jonatan about if you should exit all at once or if you should leave a runner on, and it really just comes down to personal preference. So I think that's a great framework for traders to start with, and then you need to run it and test it yourself and find out what you like and what works.
Yes, and for a disclaimer right away, we're not financial advisors. We're not giving financial advice. We're not. Let me see. We have Jonatan's. There we go. We're not financial advisors. This is not financial advice. You should not do anything in the market unless you test it for yourself. So what I just suggested is an invitation for you to test it out, right? Do what I said and on the paper without risk, and check if that works for you, if it makes sense. And then you do your own due diligence before you actually put money on the market. Because as always, not only with me, but with everyone, it doesn't matter who's telling you anything, you should check for yourself before if there's any truth to that, right? Not only in trading, in the world in general. Right. Doesn't matter who says it, what the source is. Doesn't matter if it's CNN or if it's Fox or it is whatever source you are looking or hearing at. You gotta have check the source all the time, and especially when getting tips and tricks from for trading as well.
And I think here's another example of a framework that you can consider and test it for yourself. So just like Victor said, you want to do the work on your own to test if that is a strategy that makes sense and also makes sense for you, but keeping it simple. And Victor's strategy, he just explained in a matter of minutes. That's very simple. Not easy, but simple, right?
Yes, exactly. Actually, to make it a even simpler visual representation of what I meant is when you have a one bar, and this is the most simplest example within engulfing. We have one bar going down, a bearish one, and then you have an engulfing bar, right? That is what creates the order block to me, according to my definition, right? There might be different definitions of order blocks, but that's the simplest one, and I like to keep it simple. And you wait for price to come back to that order block to have that reaction, and that's it. You're only looking for that reaction, how exactly you traded, how far you put your stop. That's for you to find out. How far you're looking for the TP, that's for you to find out as well. But the general idea is that you very often you have a reaction from these structures, and you can easily, well, not easily, you can trade them profitably.
Nothing easy about trading, but it can be simple for sure. Yeah.
Nothing easy at all. Nothing. Yeah. If it was easy, then you'd see all kinds of a lot of multi-millionaire traders all the time, everywhere. That's not the case.
Right. All right, Victor, you have a couple of requests here. So requests for UJ and also GBP USD.
Perfect.
So UJ and GU, if you want to take a look.
All right, let's. Do you have any preference which one you want to take on?
Well, Sohan asked about UJ first, so let's start with that.
Okay, perfect. Let's do that.
Or at least that's what I saw first. Hopefully,
it's okay.
Up in the chat, but it can be hard.
Yeah, even if you didn't, if there was some request earlier, we have the best intentions here. That's always the case. So, we can only do our best. Okay, so on the higher time frame, I always start from the monthly going down to understand where we are. Is there a monthly play, a setup at play? Because if that's happening, if there's a monthly setup at play, that's going to be the driver for price action. If there isn't anything, then we can move on to the weekly and do the same thing. If there is a weekly setup, triggering or just trigger recently, then that's going to be the driver for coming couple of sessions. But that's the whole idea from doing the top-down analysis, understanding where we are in terms of the higher time frames. Okay, so what I see here is we have a quasi. First one, we do have a quasi here, which is the left shoulder. That's the established uptrend. We have the break of that neckline, and we went all the way to we had the quasi right here activated. We only had one structure for it to go for, and that was this one. And you can see how beautiful it went to that structure, and basically finished completed the pattern, right? The pattern officially finishes at that yellow line, but for all sense and purposes, it was so close that I would consider that to be completed. It can still continue for continuation, but in this case, we don't have anything going back, so there isn't anything at play other than the same order block that was already there and that we already reacted from. So that's on the sell side, on the monthly time frame, and on the buy side, we do have a there. Is this fresh? Yes, to me it is, and you can see that reaction again. That same reaction. See that? It comes back, creates that order block, comes back to that order block, and react from it. Very, very simple. All right. So what else do we see? We do see that there is an order block here, a fresh monthly, which we are very far from. The fact that we have a fresh order block right here, and we had that reaction, to me tells me that from this moment, from this point, from this area, we can expect a push upwards, and we did have this big handle. So I would tend to be careful, or at least be conscious that that move maybe hasn't finished yet. That's the big candle that we just had. That's the momentum. Maybe this is just a retracement in its continuation because of this order block. For certain, of course, we do not know, but we do understand that that's what is driving the market on the monthly time frame. The weekly, what do we see on the weekly? Actually, a very beautiful. Ooh, I like this. Haven't seen this. This isn't a pair that I trade, but looking at this area, right? This area. I'm not looking for the bigger quasi, which is visible on the monthly. But what do we have? We have an established uptrend. Same thing, right? You hear this all the time. There's that market has that fractal nature to it, and this is it. This is exactly what we mean by that, right? That you see the patterns on a one time frame. You zoom in on a different section, and you see, similar patterns, if not the same patterns, again and again, and you keep on doing that. And I'm sure if you go to the 1 second, you'll see these patterns as well. So it's like nature. Nature has fractals all the time as well, right? If you go in, you have smaller units that are very similar to the bigger macroscopical units that you can see. All right, so we have the uptrend, we have the break of that neckline, and what area do we have? We have 3 areas: 1, 2, and 3, and price comes to that area, initially has a reaction, and another one a bigger reaction to the downside. That's insightful information, because price is reacting to one of these order blocks, one of the 3, and that means that it is reacting, it is behaving and following the plan of the quasi, meaning the quasi, right? If this quasi were to be true or be accurate in describing the behavior of price, and that's exactly what patterns are supposed to be to some extent, then the target for this move would be this lower end. Keep in mind that that's against the monthly structure, right? Because I just said it's a monthly structure that's being reacted, and this is exactly what we are in that push momentum, bullish push. So that could be that might be too ambitious to expect, but you can at least, not at least, but you can reasonably expect that there's going to be a structure. It is going to be a move downwards until it hits some structure of relevance, and the only structure of relevance we have, or the first one we have, is this monthly time frame. After this move, I'm going to understand that that's going to be the first trouble area, right? We talked about that not earlier, but a week ago, which is earlier, but a little bit more than that. That's the first area where, at least on this time frame, that we can expect from price some kind of support. So that's the weekly. Let's break this down further. What else do we have? We have a reaction of that weekly time frame structure. On the fresh order block, we do have this one, but it hasn't been retested yet, and that could be perhaps the target where it's going to, meaning that it's not only going to go to this level, to this area, but perhaps a little bit deeper. Who knows? That those are just scenarios, right? We do not know these things in advance. So we have an uptrend that has, if we go to the daily, we have an uptrend that is intact. Higher highs, right? You can see that higher highs, higher lows. That is in fact is still intact. So keep that in mind, that it hasn't changed. The trend on the daily hasn't changed yet. The momentum that we saw on the monthly is still fully supported by market structures on the daily. And what else do we have? Let's mark the order blocks. This is the relevant one right now. Daily. All right, so what else? Those are the structures we have. This is the playing ground, and since we left a daily order block behind, it's safe to assume that we're going to go at least to the next order block. And actually, we already went through one, and so the next structure would be, to me, this. This is the target. At least using order blocks, I'm going to understand that this is the target that it's going for, right? Each time frame will have its own targets, the monthly, the weekly, and the daily, and sometimes they overlap, but not all the time. So I understand that we have the daily order block, fresh order block. We have reason to be short, have a bias intraday because of that reaction. Is actually even an outside bar. So that's very powerful, and we can expect price to reach this since it broke the previous one. And giving that dollar weakness that we're seeing right here, I would be wanting to sell from an area of supply, and the only area of supply that I can identify in the H4 is this order block. So I would want to sell from this area into that lower area I just mentioned. Of course, price doesn't go back in time, so that arrow wasn't correct. Something like this is what I'm looking for, right? So we have, I don't know if it's going to come back. Maybe it will not. But if it comes back, I want to be looking at that order block to short from. If we go to lower time frames, we can refine that even further with this order block right here. It may not come back. If it doesn't come back, that's fine. I'm not going to be angry at price. I'm just going to follow price as it does its thing. And if it doesn't come back, then I'm not going to take anything. I'm not going to participate, and that's fine. That's perfectly fine. There's also a quasi here on the 15-minute, right? And you can perfectly take these as well as entries. And let's see what else. Yeah, I think that's about it. So I would be considering this doesn't have perfect alignment to me, but I mean it's perfectly tradable still on a 50-minute order block right there. As if price comes back, I would be going for that continuation of the move, right? You could just enter here and target that lower level, but where do you put your stop, right? I don't have anything, at least on this time frame. I would have to put myself all the way up here, and that's not very at least that's not the kind of trade I want to be in. I don't mean to say it's not profitable, but I prefer to have tighter stops and get in at the place where I my data tells me I have a good chance in being as close as possible to the stop. All right, that's on UJ. So I see based on these order blocks, I see weakness on UJ, and probably going for this area on the daily time frame. And on the H4, I think for those who are familiar with this, we can also, if this is going to be the area that's going to reverse from, then we can start thinking ahead. Are there any other indication of quasis on other time frame? Right? This would be the quasi on the opposite side that might reverse price back into bullishness. So we can check if what do we have in that sense. So that's going to be one here, 2 and 3. Perfect. So we have 3 areas. One. The other one was already didn't trigger. Right, there we go. That's the third one. Didn't trigger and convert and moved, reversed very quick. Went through it, didn't reverse. So these are the 3 areas based on the H4 that I will be looking for the bullish move. Right. Based on that, I could be looking for a long from here. But I understand that the higher time frame, the momentum is to the downside. So if I take this long, I want to be very cautious holding this too long. Maybe just to the next area, the FTA, first trouble area, not the Food and Drug Administration, just the first trouble area, and then you offload the whole position or big part of that. So in order for you to have profits, even if the latter part doesn't get to TP, that you're already in profit, or you can just close it all because we understand that the momentum is to the downside. So it's likely to, expecting this move is possible, but it's based on what we have right here. It's not very likely, right? So maybe in a couple of hours we can see some more structure, and that assessment can change. But right now, order flow on the H4 is still bearish, right? So unless that changes, this move all the way back to the top of that bullish quasi, is not your best bet. So that's my idea on UJ. I hope it's Sohan. I like your name, by the way, Sohan. Thank you for your question, your request.
It's a great question. I'm seeing a couple other really great questions about, you've talked about the time frame being fractal and how do you manage that? And I think that you and I might have the same answer. But do you want to go first, Victor?
Sure.
I'll say what I think.
Yes,
with the fractal nature. Oh, go ahead.
It's up to you. The fractal nature of the market tells us that, or what it basically, you have to, at least that's my idea. That's probably, it's more people share this idea, but it's, in any case, it's my idea that you have to consider each time frame their own playing field. Meaning, let's say you are at floor, you're at daily time frame. A daily time frame can stop another daily time frame. Meaning, a structure in a daily time frame, a pattern, a quasi, an order block, can stop, make pause at least the same kind of structure in the same time frame, right? So because they're equivalent, they're both the same time frame, they're from the daily. But what is important to understand, that that's not the case when you switch time frame. When you're looking at the weekly time frame and the daily, you got to realize that which one is stronger. The daily is faster in the sense that it may have quicker reversals and things like that, or price action will react very quickly to the daily. But in general, the higher the time frame, the more power, the more authority, or the more force that structure has. So your best bet is to take. That's why we do top-down analysis, because you want to know if there is a monthly structure at play. And if there isn't, if there is a weekly, because if there is a setup in that time frame at play, you want to align yourself as much as possible with that direction, right? If it's a bullish order block, and that makes you have more reasons to think that this is bullish, price is likely to go higher from here based on what the weekly is telling you, then you want to be looking for daily structures that support that direction. And you go with that, and you keep on doing that to lower time frame, as I do all the time. What you do not want to do is go against it, or if you do go against it, understand that that move is only going to last until it gets back to the weekly. Let me make this visually better. Let's look at a weekly structure. Let's say we have a weekly structure here, right? We had sticking to the same time frame. We have a bearish entry order block on the weekly on this time frame, the weekly, right? And if we go deep in, right, we understand that we can see here, for example, let me get an example, maybe something else. Let's see, we have one example here. Trying to get an example that makes the point clear. Okay, yes. All right, so in this case, now that's not a very good example because it actually failed. But imagine, let's assume for a little bit. Imagine you have the weekly here, right? So you have the weekly order block here. Let me extend this. So this is the weekly order block, and you have a bearish order block, right? That on a daily. So you have a daily order block that is telling you that it's actually bullish. So I actually painted the arrow incorrectly. So a bullish order block, right? Price gets into the weekly bearish structure. And as it does that, it creates a bullish daily. Now you have a daily reason to think that this is going to go higher. But you also have a weekly reason to think it's going to go lower. Which one is going to be right? We don't know in advance. We never know in advance. But what we can say is that the weekly structure is typically stronger than the daily. It's not reasonable to expect if you don't have any other information, only have those two, infos, data, things, indications, then I would go with the weekly, because I understand it that the daily is the weaker one here, right? It's likely what's going to happen is that the market, the daily will have its effect. It will push price higher. If price comes back to it, it will have this reaction. But what likely will happen is that in the end, maybe it will squeeze it a little bit, but in the end, the weekly will kick in. So you want to understand that what time frame each structure is and treat them as such, right? So you can expect something, maybe if it's a daily structure, you can expect it maybe for this day as it comes back, right? For 1 day or maybe 2 days, as it comes back to retest this order block, it's going to have a bullish reaction, right? But it doesn't make sense to expect for 1 week or 2 weeks, because on that time frame, you have a bearish structure, right? So you got to understand and assess and recognize the hierarchy of the different time frames they have against, versus each other. So in any case, if you're going to trade this daily long, this structure, I would just go to the FT8, right? The next trouble era, the very next level, you get out. Don't expect it to break the weekly. It will sometimes. Everything is possible, but it's not reasonable to expect that most of the time. That's my idea about how I use these order blocks. We can talk, time frame, the fractal nature of it, understanding that even if they are same order blocks, in this case, this is a same order block, same concept, because of the fractal nature of the market, you can have them in different time frame. You have to understand that which one is the stronger one, and make sure you align yourself with that direction, or at least your expectation is respecting or acknowledging the higher time frame structures that are at play.
That's helpful, Victor. For me, I would say when you are looking at the fractal nature of any asset, it's really important to keep in mind that consistency is a really big piece of it. So important to know that you want to be consistent in how you're approaching the market. And so if you notice, Victor and we look at the same time frame typically over and over and over again. And every time frame is going to have its own, there might be an uptrend on one time frame, a downtrend on another time frame. So if you limit yourself to like 2 or 3 time frames, giving stronger preference or stronger consideration to the higher time frames, I think that's the best way that I've found it.
I switched to yours just in case you wanted to show anything visually to the viewers. And guys, as you are looking, and girls, as you are looking at this stream, don't forget, we're here to serve you, to make sure that you have the best chances at becoming, if you're not already, a profitable, consistent trader, who I hope you enjoy what you're doing, but that's the vision I have. Someone enjoying trading and being good at it, getting payouts and things like that. That's our offer. That's what we're here for. And what we ask for you in return is that you hit the like button. You subscribe to the channel, because you make our work a little bit easier so we can reach more people. We have a mission. We have a mission to convert unprofitable traders into profitable traders. So help us on that mission.
Right. That's right. That's a great way to think about it.
I for a minute there, for a second there, I felt like a preacher.
There's a really good question in the chat about how to create a trading journal, and I can tell you how I do my trading journal. It's fairly unconventional, but it works super well. So I don't have it up that I can show you right now, but it's actually really, really basic. So when a fighter pilot, at least in the US, maybe it's true in other countries as well, but in the US, when a fighter pilot in the US Navy does a flight, they come back afterwards and it's called debrief. So they go through the day and what went well and what did not go so well. And the way that it's structured is there's 3 parts to it. I use these exact same 3 parts. First is safety of flight. And safety of flight is going to be a basic, did you do anything today that could have jeopardized the mission, right? So for us, it's trading. For a fighter pilot, it's, was anyone's life in danger, something like that. Generally speaking, I want that to be no almost all of the time. Obviously, when you're starting out, I had a lot more yeses. But as time goes on, it's less and less. And I also, I'll talk about that in a second. So safety of flight, did you jeopardize the mission? Did you go on tilt? Did you risk way too much? Something along those lines. The next is good. So this one is, what did you do well today? And you absolutely have to have a response in this category. Even if it was like, after a really bad day, I took a walk and reflected, how I want to improve in the future. That counts as a good. And then third is others. And notice how it's framed in a sort of like a positive way, rather than saying, what did I do bad? Or what was I awful at? What did I mess up today? So others. These are the things that you want to improve going forward, things that you want to think about and get better at over time. So that could be, I really dealt with fear when I was trying to hold to my target, or I sold too early, or I, fat fingered and pushed the wrong button, or I meant to go long, but I went short, something like that. Or I left an order resting. Those are the others. And for me, I do that every single day. And then each day I copy those 3 points and I use Notion for my journal. So on Saturday, then I put a weekly review, and every day of the week, I copy those 3 points onto the weekly review. And at the end of the week on Friday, I go through and look, how did I do for the week? When the week is done, then I post it on the monthly review, which will be like, end of the Notion calendar month. And at the end of the month, so just on Friday I did this, I go through and look, okay, what were the things that I did well this month? What were the things I did poorly? What are the things that I want to improve on? And that is a method that I have found that works super, super well, and I highly recommend.
Awesome. I think that's very, very helpful. Having that fractal nature in your journal as well.
Yeah, absolutely. That I hadn't thought about it as being fractal, but you're absolutely right. It is fractal, and it's really, really helpful to do it that way, because I know for me, if I do like a diary entry style, I am never going to go back and review that. I just know that for a fact. One, I don't have a lot to say on a daily basis. Like, I know some people will really review their thoughts and especially I hear a lot of traders talk about reviewing their emotions. I just simply don't do that. There's nothing wrong with it, but it's not something that I do, and not something that I've found particularly helpful or useful. But every trader is different, and that might be helpful to you. So that's just another way to do it, and think about doing it that way if you think that would be something that would help you out.
Definitely. I think that's great advice, Dr. Cole. We're always very grateful for having you with us. So all these great advices.
You're so sweet. Thank you, Victor. Same to you. Tell us how you journal.
What I do is I use a private. I'm gonna spill the beans. I'm going to confess here. I use a private server on Discord, so no one has access to it. And that's where I have a very simple data-driven journal. Obviously, I have a journal software where that gathers all the information, right? The winners, the averages, and all the metrics of. I use MyFX book, by the way, which is free to do that, among other things. But that's the basis one that I use, and I review every day. So I just go to custom analysis and only look for today, and it will automatically give you all the statistics for today. So just a few clicks, and I will then fill them in my on the Discord channel where I will have, like how many winners did I have, how many times did I follow my plan, of those entries, how many of them did I execute to perfection, how many did I miss, things like that. And then I will have, so those are just very basic, a template basically of averages and ratios that are important, relevant to me, to my strategy, the drawdown that I took during the day, and things like that. And then I have not too dissimilar to what you just answered. I have two parts, and actually, two parts that I fill in. That's with text. One is what can I do better, and I go through, and it doesn't matter. It's not fixed to emotions or thoughts or execution. Everything. What can I do better? And I go through everything. And I start with the positive one. So what did I do well? Yeah. And then I think. Yeah. And so I start, okay, so I did follow my risk management. I did not miss any trades. I did put the alerts in. I did enter. There were no human errors in the lot sizing and so on. I go on through everything. I close the position when I should, things like that. And then the second part is, what can I do better? And that's where I change hats, and I say, okay, where did I fail? Where did I, slack? What can I do better? And that's, those two things typically is enough for me to understand, okay, this was a good day. I traded, I had positive P&L, but it could be a bad day because my execution wasn't according to what it should be, or I could, because if we only look at the P&L, the P&L will tell us if it was a good day or not, but that's the wrong perspective in terms of, as a trader, we shouldn't be looking at the P&L. You could be trading horrible and still have a positive P&L. That's just a time bomb, right? So you have to, but by breaking it down, by scoring myself how well I followed my plan, and that's what I'm trying to answer when I say, what did I do well, not P&L wise, following my plan wise, and what can I improve in following my plan. And when you put that focus every day, it makes very clear, your progression, how you're going, and where you're at. And basically, it's very easy to at least, I think for everyone, it's very easy to, get a feedback from very immediate, almost, right? It's the same day of things that you didn't do, and then that could be, food for thought, like how you deal with them. But at least you identify them first, and then that's it. So and that takes me about 20 minutes, and usually I take a screenshot of the day, to understand, what are the areas, why, and things like that. But that's more graphical. So matrix, screenshots, with the entries and exits, and what I did well and what I didn't do as great, what I can improve. And that's it. That's my journaling process, starting with the statistics on my FX book.
Yeah, and I think I kind of think of it conceptually as three different. To me, the written piece of is what I consider journaling, but I also in Notion take screenshots actually all day long throughout the day as the trades are developing, and that's super important. And then of course track statistics, also super important. There's a ton of software out there that you can use depending on what your preference is, and I think that's also a really important piece that you complete as a trader as well.
Yeah, I think journaling, right? Without, if you only journal and you don't have a profitable system, you have nothing about risk management and psychology, it's going to help you with your psychology, because you can look at your behavior and you get feedback from your data. You have to have a profitable system to begin with. Yes, journal is not going to replace that. But once you have everything else in place, the strategy, the risk management, the mindset, journal is the next best thing to focus on, because that's going to make you improve in your execution, in not only your execution but also things perhaps on your strategy that could be improved. Doesn't have to do with your execution. Perhaps you're missing out on certain edges. Or maybe you're leaving money on the table. Maybe you're seeing certain patterns, phenomenon, and if you don't journal, you wouldn't be able to see them. It will be very difficult for you to see it. For example, just imagine you journal and you start seeing that, let's assume that you didn't have a rule on, I don't know, NFP, for example, because whatever during your system building phase, that wasn't an issue, and you start seeing that you had, more often than not you lose. That's information, that's observation, very valuable, and that you would get from journaling, and that's so it can help all of the other areas as well as risk management, and obviously your psychology as well, because that's all about looking into the mirror, looking back at yourself and how your behavior was and how it's supposed to be and things like that. So I think after those 3 pillars, journaling is what will keep you consistent and actually make you improve as a trader.
Yeah, I agree. And, you touched on something that I think is really important too, about rules, developing rules. Like, for example, you used the example of NFP. I think that's really important thing to do. But I also think if you're a developing trader, keep in mind that it's okay if you don't have your rules established yet. It's okay to make mistakes, because that is how you learn. And you will come up with rules eventually, but you want to have, I know Victor's talking about when you have many iterations of a particular setup or something, so that you know what rules make sense. I've heard traders say things like, well, today was NFP and I lost money, so I'm not trading NFP anymore. That's not really enough data to go on. That might be a rule that you want to stick with eventually, but if you are just starting out, it might be a little too early to come up with a hard, fast rule like that just yet. But absolutely, Victor is spot on. Eventually you want to have rules for your system that make a lot of sense. I think of them more as like part of my system that, than rules per se. I think I'm trying to think if I can think of any time that I conceptualize it as rules, but it's the same thing. It's the same thing. It does take a while for you to get to the point, though, where you can have mechanisms in place that kind of protect you.
Yes, actually, I don't make a distinction between rules and the system, basically, right? Because the system is rule-based. At least my system is. So if it is a rule, then it certainly is part of my system. It's something that I need to have in that flow chart of mine, and you should have that too. Or at least that's my opinion on, towards everyone listening to us here. You should have a flow chart initially written on paper in front of you. Right. So what is step number 1? What is step number 2? And if NFP is relevant for your result, then it definitely should be, let's say you trade or do not trade or do something differently on NFP, or stop trading a certain amount of time, minutes before NFP, or close existing positions, whatever the rule is. That should definitely be, if it is a rule, if you can call it a rule, then definitely it should be in the trade plan. And you should have it in front of you, very clearly, until you can dream it. You dream it in, while sleeping.
Right.
Until then, it should definitely be on your, on your desk, perhaps on your charts. On your wall next to your screen, wherever it helps you. Maybe on every door in your house, so you see it every time you open the door. Whatever it is needed to help you stick to the plan and be aware of it.
It's funny to me, Victor, this always strikes me as funny, is when you have rules, you spend all this time going over them and establishing them and developing them. Maybe this isn't true for you, but for me it is. In the heat of the moment, it can be so easy to just forget a rule.
Yes.
They just go out the window, and then you take the trade and you're like, that was my number 1 rule. How did I do that? And so putting different mechanisms in place again to help you avoid that. Like you said, a little checklist. You don't want a system that's so complicated you need a whole sheet of paper. A little note card or Post-it that reminds you, this is what I'm doing. These are the rules that I've committed to and that I'm sticking to as part of my system. That's a great advice, Victor, as always.
Yes, actually, in our minds, everything is possible, right? That's imagination, and it's very easy to imagine that this is going to be a trader, even though you didn't follow the plan. Sadly, that's not how things work. If it was this easy, then we would imagine ourselves all the way to payouts and to great wealth. But it doesn't work like that, right? The market only listens to edge. You only will eventually end up winning if you have an edge in the market. Everything else is random. And the edge is very fleeting, right? It's not something. If you don't do everything right, you're probably gonna lose. It's gonna flow away. It's like evaporating, like a very easily evaporating a liquid, right? If you imagine you have alcohol on your hand, it's a matter of or so, it's gonna dry out. It's gonna evaporate. It's the same thing. If you do not follow, if you do not know what the ingredients are, in other words, what I mean is what you need to be doing, where you need to be trading, when to be trading, what exactly you're looking for in the market, and where you should get out. If you don't know all these info on the edge, before you know it, it will evaporate, and you're only open with a random trade, which will go randomly in your favor, randomly against. You're not going anywhere, and that's where you all traders. Everyone can trade randomly. Just open trade and you're trading randomly. What we want to do as a trader is we want to elevate ourselves, leaving behind random trades and trading into the edge. And the only way to know that is you do have to have data to identify an edge to begin with, and then there's a framework for that. As long as you're within that framework, you're trading within the edge, and that's the way you can extract profit from the market. As simple as that. It's not that simple, but I mean that's it. And using imagination, leaving our rules behind, that's when we start getting out of that framework of the edge. That's when you start going back to what everyone else can do without any plan, which is thus trading randomly, right? We have to leave randomness in behind and move in towards edge. That's how I see it.
Yeah, that's an excellent way of stating it. I agree.
And even though I've had a wonderful time with all of you guys and girls who are watching us right now, and I wish we could continue this stream, a couple of hours at least into the night, at least for me. We have come to the end of our stream. I would like to thank you for watching. I would like to invite you to click on that bell that says subscribe, and the like button, that little thumb up, to support our channel. I'd like to invite you, if you're part of our Discord community, to come and join us for our workshop we're going to be having in about 41 minutes. Yours truly will be hosting that. And that's it for me. In any case, any last words, Deanna?
That's it. Thank you so much to everyone for being here. We love it when you show up and ask questions and comment and contribute. Just makes it so fun and makes the time just fly by. So we really are thankful for you all being here. Of course, awesome to see you, Victor, as always. And thanks for just making it such a great community. We really, it is so fun to show up on Monday and know that, it's going to be a part of a positive, exciting community and talk about the things that we enjoy, trading and, how to get better. So thanks everyone for being here.
All right. On that note, have a wonderful rest of the day, and see you tomorrow. Bye-bye.
Bye, Victor.